What's going on, guys? Happy Friday, happy Friday, happy Friday. Kind of sad Friday, though, if you really like the trade like I do, but it's never too bad to have a weekend, right? Especially if you got family. And if you don't, go visit your family. They love you. I always, I preach family all the time, guys. I mean, we're here to make money in the stock market. We're here to do all kinds of fun things with said money, but really when it comes down to it, it's just money. It's just monetary. It's all objects and stuff that you're buying with the money. Now, if you're using that money to travel the world and do experiences, that is something that I recommend highly. But I just can't stress enough how at the end of the day, I've had some pretty bad days trying to figure out this whole trading thing. And at the end of the day, I get to hug my kids and just be with them. And while that's happening, nothing else matters, right? I don't know why that even came. That was not how I was planning on opening this, but it just kind of happened. So, cheers. And if you need somebody to talk to, seriously, reach out. I'm always here, and I can be a pretty good ear. I've been told that in the past. If you need to talk privately about something, I can be that guy for you. You know, someone outside of your inner circle. I'm a good ear, and I like to think that I've been through a lot in my life, and I could probably give some advice if it's wanted. If you just want somebody to vent to, there's that too. So just letting you guys know that that's there. But anyways, yeah, that got deep pretty quick. Sorry. Hey, and what's up, Drew? What's up, man? James, how you doing? Uh, let's get it a little bit deeper, shall we? That's what she said. Oh man, I went out and actually got some real pineapple juice. What a difference! What a difference that makes. So good. We got the blue drink tonight. This is the specialty. It's called the Blue Hawaiian, is what I call it. It's what I think most places call it. I think some places call it like the Blue Hurricane or just a hurricane. But basically, it's just 25% rum. Using pineapple rum is best, but I like just using regular Bacardi rum. 25% blue curacao and 50% pineapple juice and some ice cubes to keep it nice and cool. Favorite drink in the world. So good. Well, Thomas, go grab a drink. Oh yeah, I wanted to check and make sure that that chat was showing. Oh, it is. Sweet. Okay. Let me how low does it go? Let's see. Right there. Gotta bring it over a little, it looks like. Right there. And down. Right there. Perfecto. Right. Mark? Is it all one word? Markizer? Markizer? Thanks, man. Thanks for the sub. I don't know if you're actually in here, but thank you. Sounds fancy. It's not fancy. It's 3 ingredients and it's easy to make. It's pretty hard. 25, 25, 50. It's the 112 of drinks. It's kind of funny. Yeah, how did everybody do this week? Good thing to start out with there, James. I'm just gonna kind of go through my trades for today. But yeah, let me know how you guys did. What did you guys trade? Would love to go back and look at some charts. I really like what I'm doing here with my my trades the last couple days, and we're gonna kind of get into that because I said last Friday that I was probably gonna be doing this, and I started toying around with it, and I really like it. Bought that RCL at 60. So I'm so confused. You didn't go long RCL, did you? By the way, GDT, welcome. If you need I'm not gonna bring that up. I'm gonna DM you because that would have been funny to say, but I don't want to say it. No, I didn't even mean that, but yeah, I guess that's kind of why I was confused. Not so okay. So you covered at 60 because it didn't get to 60, or did you do it on this first one? And oh, are you saying you covered at 60 and you caused it to do this big move back up and stop me out? Is that what we're getting at here? I was utterly confused when when you when you had said that on YouTube. mRNA tails below 67 on the first 2-minute candle, taking candy from a baby. Let me see. Yeah, that's a nice one. This is the same move that I'm looking for, just the opposite direction. That's a huge candle though. $1.50 candle. But I mean, to simplify what I'm looking for, guys, is I'm looking for the same thing. I'm looking for the intense move, and I'm looking for the big extension. Like, let me pull RCL back up real quick, and I want you guys to look at this chart throughout the day, right? Look at this, and then look at that move, right? So I'm still looking for the same things, and then I'm really looking for that volume, that big volume pop, right? Usually it's going to be near the top. It's just how it works. And then what I'm looking for after that big volume pop is I'm looking for a candle with less volume and not a lot of movement, right? Which is this candle, right? Let's see. 1045, 1045. So this was the big volume candle. This candle tried to go higher on less volume. So that is a signal that we ran out of buyers, right? It's due to, at least consolidate like it did. So at that point, I'm then looking for the first 1-minute candle to break a low, right? So we take this candle here, 51.78. We jumped in at 51.73 on the break of this candle. And I remember it was kind of crappy because it got spready right on that break because it was just chilling, trading at like 80, 82 cents. And then all of a sudden it just dropped, and it dropped right to 73, and so I hit the bid. And we got in. Unfortunately, that was actually, look at that crap. That was actually 2.5 cents lower than it ever printed on that candle. What the crap is that? So I guess the last price to actually go through to the market was 51.75.5. But at CMEG, using their smart route, I guess I got filled at what the level 2 currently showed on that break, which was 73. So that's kind of crappy. But it did come down further, so it didn't really matter. But then ultimately it went down to 60, where GDT covered. And that thing it shot right back up through my entry. And if it would have started to slowly come back up, and I could kind of tell that was the bottom, which you'll see in some of my other trades, I probably would have took it there. And I would have just took the break-even trade. That's kind of what we did on NRG. We're really trying to be patient, and we're looking like if we draw the fib line here from start to top, the 50 was all the way down here at 51. VWAP was all the way down here around like 50, 60. So that's the ultimate goal, is to try to get down towards that 50 fib line and cover out most of our shares. And then if we have more of a move possibly left, and you can see I drew a resistance line here. That was the previous resistance at 50.71. That's ultimately what we're looking for. But I remember when I jumped in this, I saw that yesterday's high was up there at 51.40. I figured that would definitely try to be used as support. And I had put an order out at 53, I think it was. It was something like that. And we just couldn't quite get there. It got down to 60, and like I said, this thing got bought right up. And it pretty much went right to the highs, and we stopped out. But as it went high of day, it only got basically 2 pennies above high of day after this huge move of 2 points. It consolidated a little bit and then tried to go higher, and only got 2 pennies higher and got rejected. And that was like, okay, that's a sign that it's a failed breakout, and we're going to go back lower. So I jumped back in right as we came back down into the range as quickly as I could once I realized it. And we ended up getting in at 51.90, now just risking off again the highs. So basically the same stop. And we got that flush again. And I remember saying, I'm just looking to get a cover. I actually put it at 62, I want to say, just to front run that 5160 this time. Just looking to get most of my shares out because we got a much better entry that time to front run what is probably going to be which is probably trying to be used as support again if it gets there. Sure enough, it gets there. It gets to 61. We were on the bid at 62. It went right through us. And as you can tell, it did print at 61 this time. We didn't get filled. So once I realized we didn't get filled, it started to jump back up and I hit it at 66. It was a pretty split second decision. And that was for 90% of our position. So we got 139 shares up here at the top. We took 125 off of them right there at 51.66. And I was really hoping for this to continue down so that we could, make a little bit extra on those remaining shares. But this thing said, nope, well, we're going to try pushing higher that one last time. And as you can see, eventually, after it went that high day one more time, it finally kind of flushed. And I'm a little upset that I stopped watching this, but I remember this was the last trade I took. It was starting to get a little bit late, and my wife was like, "Aren't you usually done trading by 11?" And I was like, "Yeah." And so I kind of saw this kind of just grinding higher, and I was like, "Oh, it's probably just going to keep grinding for whatever reason that it was up in the first place." And so I just stopped watching it, and I started kind of chilling with the kids and stuff like that. But if I was here, this is the other prime setup that we look for, right? We look for a push through high of day. And obviously I'm saying that like you guys know, but this is the other setup that I am looking for. A push through high of day, gets rejected, comes back down, tests that area, tries to pop back up, can't go up to high of day again, so it's making a lower high and then coming back down into that range. I don't know why I have this line drawn here. Is this off the daily? It must be off the daily. Let's take a look. That is an ugly chart with all these lines on it. Let's see. That's kind of just the ugly daily in general. Look at all these gaps. Crazy. All right, we're not going to look at that. But anyways, when it comes back down into this range here, you can just look to get back in, right? So once you kind of break this area here, you could look to get back in because the odds are, even though you're going to miss this huge candle, the odds are when it comes back down into that range after trying to go higher, you're going to get the real pullback that you're looking for. And look at it come all the way back down to that original 50 line, mainly where VWAP is at that point, and it tries to bounce off of it. So that was a pretty good opportunity that I missed. I'm not positive I would have even got the trade, but I definitely am looking for those types of plays because those are pretty high probability. So the same thing kind of happened as the first trade here on NRG. But look at this chart, same, almost the same ordeal. Yesterday's close, if we want to scroll back real quick, you can see it right here. That actually tried to be used as resistance. When we scroll in here, I forgot to turn off my flux. Let me turn that off real quick because my charts are like really dark. There we go. So it tried to be used as resistance here, and then it busted through. And same thing, we got up to yesterday's high, and it started to fail through yesterday's high. So I'm on the 5 minute. Let's go in here. So as you can see, it curls up, breaks through, gets over yesterday's high, and then it just starts to consolidate here. So we're looking for the break of that 1 minute candle. Now, you could use one of these top two ones, but I much rather be a little bit more convinced. So I always like to go to the candle that made the high, which was this one. So 33.79 just gives you a little bit more conviction. And this was another one that actually jumped on us a little bit. It jumped down. We got filled at 72. It was coming down. We were pretty hard set on getting close down to 50 here for our fill for the original amount, 90%. And unfortunately, this thing got to about 64. Yeah, 64 was as low as it got, right? Yeah. And we realized it was coming back up, so we decided to exit our position. If we really wanted to, I think this one decided to work without ever going high of day, but it took a while. Yeah, like look how long this thing took. So that one would have worked if we really wanted to hold it. Definitely wouldn't have caught the entire move like that all the way back down to VWAP, but still just kind of read it in the moment, and we weren't right or wrong. It did go higher from where we were, but it didn't go back to high of day. So yeah, just one of those ones where it happens. TSM was our first trade of the day, and then we'll catch up in the chat real quick. This one just right out of the gate, way above yesterday's high already, so it gapped up a little bit. Just made a nice move, and this one I kind of fault myself. The last couple days we haven't been getting any follow through, and it just sucks. Just haven't been getting the full moves back down to VWAP to the 50. They've just been kind of chilling up here and then trying to go higher. And so TSM, I got a little trigger happy on the exit because of that. And then later on, I caught myself on RCL saying, okay, I'm not going to do that again. And it ended up biting me, or not, I meant NRG. It ended up biting me a little bit because I was definitely waiting for the 50 and we never got there. So that kind of sucked. But as you can see, same type of difference. And this one, I didn't really have the best trigger because look at this huge candle up top there. Compared to the move. So I basically used my intuition, and I remember describing this in my video today, that on these two candles here, they're 2 1-minute candles, this thing went all the way to high day, got rejected all the way back down to the top of the body, so it closed at 74.90. This candle opened, obviously, right there, 74.89, and it went up to 75.37. So it went up to the highs, came back down below 75, went back through 75 to 75.37, and then started getting rejected. So by being able to read that while I was watching, because I had this up, obviously I was watching it, to me, that is basically what we saw over on RCL. Remember when I was saying up at the top there that it tried to go higher and make a new high, but didn't. It's just this one actually showed you the candles outright, so you could actually see the move happening. But if we go back over to TSM, that all happened in just a quicker time frame. It happened all within 2 candles, and unless you were actually watching it, I mean, you can see it now if you really want to sit down and read the story of the candles. But you can see that it came down, went back up, got rejected. So technically it's the same thing. It made a lower high, and as it was coming back down, that was my intuition saying, okay, we're rejecting, not going back high of day. Let's jump in. And so we did, and we got a nice flush. And unfortunately, it came down to 27, and I had an order out right over 74, and we just didn't quite get down there. And so it started to pop back up, and it went through 50 and then jumped back down, and it tried to go back up again. And I was like, okay, this thing obviously might be forming support here and looking to go back higher, so we're just going to take it off. And we ended up with 45, and unfortunately we were wrong. We should have been a little bit more patient with it, and we should always be more patient because we only ended up with about 0.5 R there, and I'm really looking to try to make at least 1 R on most of my trades. The only time I'm not going to be making 1 R is something like NRG, where I feel like it was just so obvious that thing just when I was in this trade, it was just so obvious. It hit 64, came back up a little bit, hit 64 again, came back up a little bit, hit 60. Like it was just so obvious that was being held as support there. So the minute it started to get bought up off of that level, it was just very obvious that this was going to at least try to go back up. So at that point, I was like, okay, we're just going to jump out. If it wants to go higher, we can look to re-enter. But there's no reason on letting it attempt to go back towards high of day just to get stopped out on a trade that, it just didn't do what you wanted to do. We got in. It wasn't fully pushing through like we wanted it to, so just jump out, right? It's not a big deal. And that's what we did. But okay, let me catch up here. David, what's up, man? I didn't even see you say hey, but I see it now. Dario, what's up, man? James, you're doing the same thing, basically? Yeah, I get it now, GDT. I'm an idiot. You're massive size. You're 10,000 million shares. So, I mean, it did. I mean, you were part of the reason. If you covered at 60, you were part of the reason. You bottom ticked that thing and you said, send that shit back up. Do you feel like shorting these works better than going long into a dropping stock? No. Actually, to be completely honest, I think the going long into stocks that are dipping down I actually feel that those might work better, to be completely honest. Um, hey, look, there's a cat in a box. What's up, mother? But I actually feel that those work better, in my opinion. I think that once you run out of buyers, um, there's a lot less people trying to sell. And David, actually, if he's still in here, he made a very good point. You don't ever see institutional traders. Well, at least we don't think they are. You're not finding big institutional traders shorting stocks on parabolic moves. It just doesn't really happen. So in order to make a stock come back down, you need the human emotion from the retail traders to not only sell, but you need the other retail traders, the big guys as well as just the little guys to start shorting, and that will cause the imbalance of the stock to go, start making its way back down. And obviously, if the FOMO, the Robin Hooders, the long bias, the bulls, if they don't think that it's high enough yet and they have a price point in mind, they could just keep pushing the stock up and up and up. And to David's point, the institutional traders are not ever going to step in looking to short a stock. It's just probably not going to happen. But on the long side, if you get a huge dip down and it's of a reputable company, the odds are you're going to get institutional traders in some cases to kind of step in and say, okay, we got a discount on this stock. Let's throw some shares at it, right? But it, like Dario just said, it's probably going to take a little bit longer. It's just kind of how longs work. There's when the human emotion behind buying something that's going up, right? People will start to get FOMO, fear of missing out. I want to get into this. I want to get in this. So they have no problem buying, even if it's already way up here. People just, the newer traders, they have no problem just jumping in, right? Because they're like, oh, this thing's going to go up. Like they find a price point on the daily, like the 200 is up near 35, a little over 35. So they see that and they're like, oh, this thing's going up to the 200. I've seen it happen so many times. You just got people throwing money in there. It could be on stock twits. Oh, NRG is going, throw money, people do that. But if a stock's going down, people are hesitant, right? They're like, wait a minute, what's the news on this thing? Why is it going down? I'm not really looking like people don't understand that stocks work the same as products for the most part. Think of something on Amazon, the hammock I just bought. I waited forever for this madness with shipping prices and stuff like that to go down from, everything going on. And once I finally saw it back down near the normal price, bam, I bought it. So the same thing with stocks. Like if NRG was one that just popped down, I don't know any stocks today that popped down. I could go look in David's. Hold on. Just so that we can have a reference. We can look at something. Come on. And we talk a lot. All right, let's see. Let's pull up just random SCPL. So if people see this dip at the bell and they're just saying, okay, what's going on with this thing? Why is this thing dropping? They're more hesitant to buy back in. It's on sale, right? This thing was $16, but now it's $15.20. So the idea is to buy low and sell high. So why would you not want to buy low and then try to sell it higher, right? That's the core principle. It's that easy, right? But when a stock's going down, the human emotion kicks in, right? Nobody wants to buy something that is just going down in price, a stock anyway, right? But if you're looking at a product online in the store or whatever, and it's something that is originally $16 and it goes down to $15, it's on sale, right? That's what you're thinking in your head. So it should be no different for stock prices, right? And you see it a lot. Like you see this a lot. It just takes a lot longer. And the reason it takes a lot longer is because you don't have a lot of short sellers when a stock's moving down looking to just cover out of their shares immediately. But if you get short sellers on a stock that's going up, and then it starts to come back down, they're looking to take their profits as quickly as possible because they know that that's all they were looking for was the counter, the reversal from the extension, right? Which is what I do. That is almost a guaranteed move in most cases. And we're not looking for this thing to come all the way back down the low a day. We're just looking for this. So basically, we're trying to figure out, okay, how low is this thing going to go before, like, let's pull up RCL for an example, before it gets bought back up and tries to go higher, right? That's kind of the game that we're playing. But 90%, 80, 90% of the time, you're always going to get this pullback before it continues. So that's kind of what we're banking on. We're just looking, and every once in a while, if you scale out, you do get a move that just continues all the way back down. Let's take a look at a perfect example. Talk to me, Goose. Welcome. ABUS. That was a perfect example. This thing had a little parabolic move here at the open, and then look at what this thing did the rest of the day. If you kept some shares and just faded it the entire day, this thing just gave it all back. Literally. I mean, look at yesterday. It almost got down to like near the top of the move, or it was actually halfway through the move from yesterday. Let's zoom back in on this. And this one, I was actually a little mad at myself that I didn't grab this one. I was focusing on TSM at the moment. I had them both up, and I saw this candle, and I was hoping to get a better trigger candle, but I mean, this was a 50-cent candle. It was really hard to kind of just jump into that, especially because this wasn't that extended. And the volume on this thing had 219 million in volume today. That's crazy. I think the float was like 44 million or something like that. Just absolutely nuts. But yeah, now to answer your question, James, I think that longs actually probably work a little bit better on like if you get that intense move, the odds are you're going to get some kind of retracement. It just might take a little bit longer. And the advantages that you have when you're shorting into a parabolic move into the euphoria is the human emotion, right? The people, as a stock is moving up, if they got in a little bit lower, they're selling, right? You got a bunch of people selling, taking profit. You also have a bunch of people that are starting to get short because they realize it's extended. And then you finally get the people that realize, okay, this is pretty extended. It's just time to stop buying, right? So all of those things, and you finally it's going up and up, and it keeps finally jabbing into that ceiling. And they're like, okay, the ceiling's right there. It's getting kind of hard to go through. Can you guys push me? Oh, no one else is here to buy and push me higher. Okay, well, I guess it's time to come back down, right? And then it can come back down, come down a couple rungs, and they could regroup. And they're like, okay, we're down here. The ceiling's up there. Do we have enough manpower to get up to the ceiling and through this time? Right. So that's how stocks work. It's really behind the scenes. If you could draw out a picture, I basically just did it. You're going to have a bunch of people, the bulls, rising the stock up. And then you're going to have a bunch of them just trying to get through. And you got those idiots trying to climb up the backs of everybody, the Robin Hooders trying to just push through by themselves. And then once they all start selling, you're going to come back down. They're going to try to regroup. And if there's enough people, then maybe they can push back up. If there's not, and they can't be coordinated enough and buy all at the same time, everything might come collapsing down. And that's kind of what ABUS is a perfect example of. So it's a fun game. It really is. And the more you really look into it, the more you really start to understand it. And I want to say, I really wish I knew what ticker it was, but there was a ticker today that was in a 40-cent range, and I had set it in the Discord, and it was just random. It came out of my mouth, and I was like, wow, did I just say something that actually might make sense? Yeah. I've been trying to tell everybody in the videos whenever I can remember that in the Discord every day. I'm still in the Discord live. It's me, Devin, Thomas is in there. There's a few other people. Pretty much the people that I've been trading with for a long time have access to the microphones. and everyone else is kind of just in there chilling, listening. You can talk in the general Hangout channel, so you still can interact with us and whatnot. And we post our charts in there. So if you're not in the Discord, join it, because I'm still basically doing live trading, but not really. Like, I'm not constantly on the mic like I would be if I was, on YouTube. Speaking of which, I am going live next Tuesday morning. It's going to be the once a month live stream that I am going to start doing. Just to kind of, do it every once in a while. But I'm going to do it on Tuesday. And the reason it's not Monday is because I hate Mondays. Mondays are typically my worst trading day. So I didn't feel like waking up to do all that. So good. Oh, wow. We're actually up to 20 people. Hit that like button if you're in here. Maybe it'll shoot the Altube algorithm, the YouTube algorithm. Maybe it'll get some more people in here. Maybe we'll actually get to do a giveaway. We got within one person last week. We had 34 people. I was so sad. We need 35 people. That's all we need. 35 people. That's it. It's not that hard to ask, right? We'll get there. One day we'll be at hopefully like 200 people, and I'll be like, man, remember that day? Remember those months that it took just to get the 35 people to do that balls giveaway? No name. Hello. What's up, man? Woman. I don't discriminate. But okay. What was the other thing that I was trying to mention? I forget. Lost my train of thought. Let me know if you guys can hear this. I'm going to turn my fan on. I'm getting toasty. And I'm also going to close my door for GDT. Don't need any random drunk people walking in my door. Jag Trader, what percentage of your trades are shorts? I would say 95% are short. I wonder, actually, you know what? Here, I'll just tell you. Just look at my my journal real quick. Side short. Or hold on, I have to see how many of these trades. So 600 trades. Short. 551. So it's probably pretty close. Let's see. Yeah, 92%. Could I say a piece real quick? A piece? I mean, yeah, if you want to type it out, go ahead. I'll read it if it's worthy of reading. Oh, I don't remember if I told you guys, but my old chair, it broke on me. I bought a new chair, and oh man, this thing is amazing. I love it. So while we're waiting on Talk to Me Goose, do you have an innie or outie belly button? I definitely have an innie. You should know this, Mom. It broke on you? Yeah, it was actually an expensive chair. It was a $300 chair. It was like a executive style chair. It was leather. It was faux leather, fake leather, and but it was really nice. It reclined like all the way down. So like when I was watching movies on the TV, I could just sit in it, and it was really comfortable. And one of the bearings on one of the wheels, like where the thing that holds the wheel on the chair, the weld on that just snapped off. And I'm actually still waiting on the refund for that because it was still like it was only 3 months old or something like that. It was pretty crazy. Okay, while we're waiting on that, let's get rid of the short thing. We can go over some more trades. Oh, gotcha. I mean, if you like, what about CMEG? Because I mean, we can talk about it. I get questions about CMEG every day, and it's usually the same questions. That's kind of why I try to make videos, just to kind of answer those questions. So if somebody asks, I can just kind of reference the video. And that's why I made the updated one, just to kind of get those questions in there that are asked most frequently. It's just easier, again, to hopefully they see the video before they start asking questions. But I have no problem doing that. The only problem is I've never talked to you before on the mic, so I just work with me there. Not saying that anything would happen, but don't want you to just kind of get on here and you know what I mean. I almost can pretty much gather that that is not you, but I always caution on the safe side. Yeah, yeah. Feel free to say whatever you want in the chat, and I'll more than gladly read it out. I have no problem doing that. So let's pull up some charts. Screenshots. I have a lot of charts. I don't know why I have this chart. Let's see. Okay. Yeah, excuse me. I don't know what it is, but when I start talking a lot, I like get a phlegm in the back of my mouth. It's really weird. I hope that if anybody knows that that's some kind of medical condition, let me know. It's like I can keep drinking, but it's just weird. No, it's not too much pot. I don't smoke. I don't know why I saved this. I wonder if I was just showing it to somebody. What was the trades? So I did trade ABUS, and take a look at this thing. What is going on? Why did it save that? There we go. All right. Stop it. Stop it. There we go. It's not the virus. This has been happening almost every live stream. I don't understand it either. It's just like phlegm rises up. I don't know if it's just the way that I talk that I create mucus. I don't know what it is, but I always end up having to like leave and blow my nose, and it's so annoying. So ABUS, when the news broke that they had won like a case against mRNA about the patent, this thing just took off, right? Absolutely took off. Halted, came out of the halt, and this, I was actually trading the way that I am now, but I used my intuition, and I didn't try to find the top, but I sure did wait until you could tell there was a top, and then I jumped in, basically just risking high of day there. And this thing did not really want to die, but I wish I could zoom in. Actually, I can. Let's just pull up the chart, because now you can see where I got in. Let's go back to that move. Let's go over a little bit more. Let's go to the 1 minute. That's gonna crap. Bear with me. There we go. So I jumped in when this thing rejected 5, and you could just tell it was trying to get the 5, tried, and it couldn't get there, and it started to come back down, and we jumped in at, of course, it's going to be this one. We jumped in at, that's not the right one. No, it was the right one. So we actually got filled all the way down at 457. Right around there. And it came down, and we felt the bottom. We almost bottom ticked this thing. No, we didn't. It actually started coming back up. That was the second one. So 442. So it came down to 423. It started to come back up, and we jumped out at 442. And then once it came back up, rejected, and it came back up and rejected again, we actually jumped in this looking for the descending triangle. And that thing worked out beautifully the second time. We got back in at 46. Or no, never mind. Went the wrong way. Jumped back in at 38, actually. So as it was getting ready to complete this descending triangle, and then it absolutely flushed, and we got out right at 4. I mean, this thing, I remember it flushed like immediately. Actually, you know what? Let me see if I can pull up the. I should still have it. Yeah, it's 23. No, it's the... yeah, I think this is it. Oh, you know what? I don't know if I was recording because this was later. That was later in the day. Yeah, crap. I wasn't recording for that. Sorry. But yeah, I got in and this thing just went. I had an order out at, I want to say it was 12, or it was at 408, and it went all the way down to what, $3.99. But I mean, it happened instantly. This thing broke and it just went. I mean, like right to 4, and I was like, and it filled me, and I just started laughing. I remember it was so fun. I was just like, whoa, all right, that works. Because it was like I entered, it was like, what was the time? I was in for 21 seconds. I got in at 2:29:46 seconds, and I was out at 2:30 and 7 seconds. I mean, I literally got in. It was just like, obviously, 19 seconds later, it was flush right to my order. Beautiful. So that was ABUS. I'm a thinkorswim trader by day. I'll chat about that all day long. Let chats thinkorswim. Let's chat thinkorswim. I this week opened a CMEG Sterling account, and they've been great. My biggest regret is overtrading. I was there. Yeah, the overtrading will definitely get you. You definitely have to try to stay away from overtrading. Just trade your setups. That's I say it all the time. Just find one setup, get really good at it. If it's there all the time, you're not overtrading. You're trading your setup. But if you find yourself starting to take trades that aren't necessarily your setup, then you're overtrading. Man. I had the same problem for a while. Don't know what caused it. Best guess was my AC filter being old. I replace mine every 3 months, and I get like the good ones because of the dogs. Every time I change them, they're nasty too. But I mean, this has been going on forever, and I'm fine. It's just when I start talking for long periods of time, it doesn't just happen normally. It's only when I'm streaming and talking for a long time. It's awkward. I don't quite get it. All right. Let's go back to the trades here. What was the next one? CSCO. That was a good one. Oh, yeah. Let me pull up the charts, the actual charts. If there's anything you guys want to actually talk about, feel free to chime in and ask me some questions. But until that happens, I'm just going to kind of keep doing what I'm doing. So mRNA, this was the opposite of the ABUS trade. So when the ABUS trade news, or when the ABUS news came out, mRNA was on the other side of it. They're the ones that lost the case, the patent case, whatever it was. And take a look at these moves. And so remember we were talking about the longs. Look at how much cleaner these were versus ABUS, right? ABUS, that thing was a tough read, and it kept, it just kept on doing its thing. But mRNA, you get these quick, intense moves on the volume, and look what it does. Basically, it retraced the entire move, right? It just took a little bit longer, right? It wasn't, and actually, this didn't take that long. It went from almost 80 or 79 all the way down to 76, and within 8 minutes, it was back up to almost 79. That's crazy. That's absolutely crazy. And then again here, it started to downtrend, and then when it broke that key area again, it did it again on even more volume. And then what did it do? It got almost the entire move back plus some in the matter of like 10 minutes. So they definitely work on the long side. You just got to find them. When in an uptrend, what's your sell margin? Ask +1, +5. Have you found a sweet spot? I use 3 cents, and I use the bid for when I'm selling. So I pretty much always hit the bid. Like if you go to my hotkey, you'll see it should say ask -3 somewhere. There it is. Bid, or not ask -3, bid -3. So there it is right there. And yes, I did change this to 10 because later in the day, I tend to not want to give back all my gains. There was a stock that popped up, and I thought about playing it, and I was like, well, I'm not really looking to give back too much if I'm wrong. So I'm not a afternoon trader. I usually am not even watching in the afternoon. I try to do other productive things. But I was here, just sitting here, and yeah. So, but yeah, I use 3 cents because I don't really want to get into a trade that jumps too far. I don't want to be in any trade that bad. I used to have it at 10 cents to guarantee I get into a trade, and then I actually got filled one time, 10 cents down, and I was like, okay, that sucked. So, yeah. That is on shorting. Yes. Yeah. On shorting, if you're going long, it would just be the opposite. So it would just be ask plus 3, which if you go into my long one, it should say ask plus 3. Yep. Right there. So I've found that 3 cents has been enough. I can't tell you the last time I didn't get into a trade hitting plus or minus 3. I feel like I've never missed a trade because it's using the current bid. So if you're getting in on the bid for a short, and if you're getting in on the ask for a long, you're taking the current bid and current ask. So DAS and CMEG, for that matter, have been so fast that I've never dealt with like, say it was at 512 and I hit the button. I've never dealt with a situation where the price dropped as I hit the button more than 3 cents to get me in. In fact, I don't think I've ever actually hit the button where it wasn't the current, I wasn't filled at what the current price is. And there's going to be times, like if it's moving really fast, like say this shot up over 5 on a parabolic move and it starts to get shoved back down and you think you hit it at 512, you saw 512 and you looked down at the button and clicked it. Well, by the time you looked down at the button and clicked it, that thing might have dropped down below 5 already. Like it can happen that fast, and it has happened to me that fast. And I remember there was a time where I hit the button and, say in this example, I got filled at 498, and I'm like, whoa, I thought I was getting filled well over 5. I just got filled at 498. That's a horrible fill. But then I go back and I watch the tape, I slow it down, and I see that when I actually clicked the button, the bid dropped to 498, and I got filled when I clicked the button where the bid currently was. And you just have to kind of, it's part of trading, unless you want to use limit orders all the time. But then there's going to be times where you do miss trades because you try to get filled on, like if you're looking to short and you want to always get filled on the ask, say you're with a broker where you can get rebates. Well, guess what? You're going to have to kind of suffer the consequences that you're not always going to get filled. But in most cases, if you get in on the front side of a move and you're looking to get filled on the ask, as long as you hit it on the way up, you should be good to go. Every time you hear a bad fill. Yeah, every time you hear me say I got a bad fill, it wasn't a bad fill. I was just too slow to hit the button. I'd actually have to agree with you. I've tried to ask flat, then +1, nope, +2, nope, +3 minimum, +5 more practical. Yeah, like I said, I've never had an issue getting filled. So, and you'll notice I've had people ask me, like if I just make sure it's not within daytime hours, but like if I hit this button, it's bid -3, right? So if I hit that, you'll notice the price that loads is 512. Or wait, it shouldn't say 512. It actually should have said 509. Yeah, so as you can see here, so it sent it at 509 because it's reading my hotkey as bid -3. But market regulations, they have to give you the best fill possible. So if the bid's currently at 512, you're going to get 512. That's a lot of people were like, well, why would you put your order? Because like you'll see me sometimes if I want to get short on something, I'll scroll down and I'll be like at 475 and the price is up over 5. And I've had somebody ask me, why are you trying to get forward to 475? The price is up at 5. And I'm like, well, just because I have 475 up here doesn't mean I'm going to get filled at 475. It's going to give me the best bid. And it applies the same way for, the ask as well. So if you don't use hotkeys, it's a super quick way to get in and out of trades, is to just, if you really want to get into a trade or really want to get out of a trade, just scroll your wheel way below or way above the price and you'll definitely get out. You'll just get whatever the best price is at the time. So, CSCO. All right. Keep asking away, guys. I love the questions. Hopefully, people are learning from the questions. And if you're not, you have another specific question, jump in with that and we'll answer it. That's what these are all about. It's all about learning. And if you guys want to talk more about strategy, I have no problem talking about the strategy here. But 2 Saturdays every month, so twice a month. If you are a high-level support member, by clicking the join button down below, it'll get you access to the 2 Saturdays, which tomorrow is the second Saturday of this month, where we have a stream that is dedicated 1 hour of just strategy. It's no BS, like dicking around, chatting about whatever. It's down to business. Let's get some work in. Let's study. Let's learn together. Let's focus on the strategy. So if that's something you're interested in, join buttons down below, and I'll see you tomorrow night. So why do I short instead of long? It's a good question. I kind of explained this earlier, but basically human emotions. You have a much higher probability, and shorts are just quicker, right? You take the steps up, and then they take the elevator down. It's just kind of how it works. For longs, it's kind of like you take the steps down, and then you take the steps back up. For shorts, a lot of times you take the steps up, and then you take the elevator down. It's just they work a lot faster. And I always like to say the human emotions behind short selling, it's a little bit easier to be the short seller, because when you get a ramp up, when people start to feel a top, they get antsy. They want to take profits. Everyone knows. Everyone loves to take profits. So if people are long and it shoots up, they want to take profit, take profit, take profit. Then you also get the short sellers saying, okay, this thing's extended, short, short, short. And then you also get the people that say, even the people that aren't taking profits, the people that are new traders and they're starting, the ones that FOMO into these trades, even they start to realize, okay, this is a little extended. I'm going to wait for a better opportunity, or I'm just going to not buy, whatever the case may be. And so you finally so you got 3 things working in your favor, and you start to come back down. And it's just, that's as simple as I can put it. The human emotions of selling versus buying, and they work faster, if I had to give you the simplified answer. If I want to get into a long at, say, 801 and the current bid is 785, is there a way for it not to fill at 785? I'm confused. Why would you want to get in long at 801 if the price is lower? Wouldn't you want to buy the stock lower? Follow up with me there, Jag. Allah says, I struggle with getting filled more often than not. I'll put an order on the ask and it doesn't fill by 1 penny. Completely reverses on me. Well, if you're talking about getting short, that's what I was trying to say earlier. You have to, if you really want the trade, you almost never see me not hit the bid. I don't think the only time I ever put orders out on the ask is if it was kind of ramping up and I looked up at the daily and I saw a key level that I thought it was going to get to, I might put an order out there just in case we get a big spike right up to that, and I don't want to miss it, because I've seen those happen before, and I'm like, all right, if it gets here, I really want the trade, but sometimes it'll just spike up there and then shoot right back down, and it happens so fast that there's no way that you could hit the button in time, and that's like the only time you'll ever see me put ask orders out. And if I was playing the front side and I felt comfortable adding in a certain spot, I might put one out there as well. But if you really want the trade and you're looking to get short, just hit the bid. If you really want the trade and you're looking to get long, hit the ask. If you're constantly trying to get the best price for a penny, then I don't know what to tell you, because if you want the trade bad enough, 1 penny really shouldn't matter to you, is all I'm going to say. I can't tell you how many times I would see a spread more than a penny and I wouldn't play the stock. I'd be like, oh, it's got a spread, right? You guys remember the 5-cent tickers back in the day? I wouldn't even look at them because I was like, oh, who would play these stocks? Who would immediately want to be down 5 cents when they get into a trade? But now you'll see me. I'm playing the chart. I don't really care what the spread is. I mean, obviously I care what the spread is. I'm not going to pay like $1 spread. I'm not even going to pay like a 20-cent spread. But if the spread is like, I would say like 10 cents or lower, I'm game, right? Even sometimes if I really want the trade, I'll take like 10 to 15 cents. But it's very rare that you'll see me do that. And in most times, when I'm looking to get in the trades, the spread does get wider because people are hammering the bid, but the ask will kind of stay where it's at, and so it creates a spread. So you always have to kind of just keep that in mind. But if you're that worried about the spread, you're going to keep yourself out of so many trades. It's ridiculous. If you're always looking to get the best price, you're going to miss so many trades. So, and I used to have that problem. I did. It's just one of those things that the more and more it happens, the more and more you get annoyed, and the more and more you're like, you know what, maybe this isn't worth it. Maybe I should just be hitting the bid and not worry about that penny, is all I'm getting at. I remember GDT actually used to kind of be that way, where he would always want to hit the ask just so that he could get the rebates, the ECN rebates. And I'm pretty sure you'll see him still like hit the ask, but I think he more so just picks price points that he's comfortable getting into a trade, but he's not worried about those rebates anymore, from what I can tell. I tried to short an easy to borrow stock today, kept rejecting me with an error code. This is on Sterling, which I signed for before you mentioned you preferred DOS. How long will it take to switch? They switch you at the end of the month, and I think it took me a day at the end of the month for them to switch. So you might be a day without trading. But what was I going to say? I'm a little confused why you would have got rejected. Do you know what error code it was by chance? Because if it was easy to borrow, you shouldn't have been getting rejected. Talk to me, Goose. Yep, so play my emotions. This market especially has seen the top gappers sell off. Yeah, it's been a very weird market. The runners have been hard to come back down. Like there's been a lot of runners that go up and just consolidate and then go higher. It's been a pretty tough market. So I never took any trades. Still learning the ropes. I might just wait till I can try out DOS. Yeah, DOS. I don't know. I tried Sterling for a little bit just to check it out, and I don't know. DOS reigns supreme, as the chefs would say. I am waiting for the next break. If I want to get in long at say 801 and the current bid is 785. Oh, so you're waiting for the break to the upside? Is there a way for it to not fill at 785? Are you saying, like, all right, let me do a hypothetical here. Let me pull up that long chart. Man, sorry guys. When I try to blow my nose, nothing comes out. It's like it's so weird. All right, anyways. So are you saying, let's use this as an example. It comes down, look at this 1 minute candle. Perfect trigger, by the way. Absolutely perfect. So 1525. So say you want to get long at 1526, but the current price is say down at 1503. Are you asking me how to put an order in at 1526 so that you would get filled as it's coming back up? Is that what you're looking for? And when I was able to short it with the paper money account. Yeah, you can short pretty much anything with the paper money account. But it's weird that it wouldn't let you short it on your regular account. What stock was it? What ticker? What's up, Blue Chips? What's up, Mr. Supercharged? Man, I haven't said that in a while. I'm sure GDT's happy. Oh, yeah. Thank you, Thomas, for mentioning that. Yeah, who was it? Botang. Yeah, they do charge you to switch over, by the way. So keep that in mind. I don't remember how much it costs, but yeah, I do remember that email they sent out. They do that because I think a lot of people were doing what I did, and they were just flip-flopping between the two. And in order for them to change, it's actually two different accounts on their side. So they have to like switch over the account. They have to contact each DOS and Sterling, close one, open the new one. Like they have to do all that on the back end. And I guess they got tired of doing that for free, and there was probably a lot of people doing it. So that's why they're charging for it now. It is fluctuating between, say, 785 to 798, so I am waiting for the break over 8. So you would want to, so you're saying you want to get in at like 801 while it's just fluctuating between 785 and 798? Because how you would do that is you would put in a stop limit. So stop limit. So let's use this as an example. So say this is your 785 to 798, and you're looking for the break of this candle, which is 8. So in this case, it's 1525. 1525 would be... Talk to me, Goose. Aren't you already a sponsor? Oh, you upgraded to the high level. Sweet. Appreciate that, man. You just want to talk to me tomorrow, don't you? I appreciate that, man. Thank you. So what you would do is you would do a stop limit. So 1526 would be the entry here if we're looking for the break of this candle. So you would put in stop limit in 1526, 1526. And just for the purpose of this, I'm going to actually do GTC so you can actually see the order come up. I'll change it to the demo account just in case. But you would put, and you can see the current price is actually down here at 1483. So if we were to just, like, let's clear this real quick. If we were to just do an order at, what was it, 1526, like this, just a normal limit order, and we hit buy, it would immediately fill us at the current ask if it was down here. So the current price is 1483, but you can see the current ask, the spread on this is a little crazy, is at 1558. So if the ask was down there with the current price of 1483, say it was at 1490, it would immediately fill us because we're putting an order out there at much higher, but we didn't indicate that we wanted to only get filled if it gets up to that point, right? We're just putting a regular limit order out there. So in order to get filled at a certain point as it moves back up, if you're looking for a key break, you would use a stop limit order. So you would change it to a stop limit, put them both at 1526. Just for purposes, I'm going to make a GTC, and then you hit buy. You'll see it puts the order right there at 1526. So when the price comes up, it'll hopefully fill you at 1526. Now keep in mind, this is a limit order. You can make it a market order if you want, and then you only have to fill out this. But if that's a key break area, keep in mind, so if you wanted the break of 8, if that thing shoots up, you might get filled at like 815 if that thing like really blows through 8 if you use a market order. But if you use a limit order, hopefully you don't get skipped and you get the price that you want, and then you have a really good entry. So that's the pros and cons of using a limit versus market. Market, you'll definitely get your fill, but it might not be a good fill. A limit order, you're definitely going to get your fill. Or a limit order, you might not definitely get your fill. You might not get your fill at all. You might get skipped, but you'll definitely be filled at that price. So there you go. That would be how, I believe that's what you're asking. If not, feel free to keep commenting. Ticker Ecom. Yeah, Ecom. I was actually kind of mad I didn't trade Ecom today. Like, actually mad. I was like, why did I not trade this? It gave you like a perfect entry. So, and this is actually a good example to show you guys what it keeps you away from too. Let me take a drink real quick. I'm gonna go try to blow my nose real quick. Give me one sec. Next time I should probably mute my mic for that. That was probably nasty. Sorry about that. All right, so Ecom. This is a really good example for what it keeps me out of from when I used to play the front side. So if I pulled this chart up, nice break at 18, gets a nice move all the way up to 19, and you can feel the top here, right? You probably felt the top. It starts to get a pullback. Now, granted, if you felt the top here at 19, got in on the north side of 19, and it came back down to 1860, that's 40 cents, right? You could definitely take some profit there and look for the rest of it come down. It goes back high of day, you stop out for the rest. But if you're looking for the bigger move back down, what this keeps you away from, if you look at this, it comes up, it makes the high here at 1911. It tries to come down, comes all the way down to 1862, does not form on the next candle and break that low, right? So there's no 1 minute trigger there. It goes higher. Finally, we come back up to 2033. So keep in mind, if we were playing the front side before, we're probably in somewhere around 19, maybe a little under. Maybe you got a really good entry right above it. And then this thing shoots all the way up through 20. So now you're looking to add, because this thing is still extending itself, and the front side is the front side. Now your average is probably somewhere like 1950, maybe a little south of that, maybe a little north of it. And it comes back down right to your average pretty much, and then tries to go higher again. So at that point, this thing consolidated enough to where if I was playing my old strategy, I'm definitely getting out at the high day break there. And sure enough, this is what you see happen all the time. You get that break. It was the final break, and then it finally works out, right? How many times have you guys seen that happen to me? It happened so often, right? We get stuck in a trade, it comes down, tests our average. We don't take it because we want more. We're looking for VWAP, and then it goes up, stops us out for a decent sized loser, and then finally works out right afterwards, right? And then we're pissed at ourselves. So the new strategy, we never get an entry point here, so we never enter. Comes up, we finally get an entry right here, break of this candle, 1984, coming back down. So we get in 1984, this thing comes all the way down 1947, 1950, whatever you want to call it, and then it starts to come back up. So we realize, okay, support, EMA is coming up, they might be trying to buy off of that. It starts to come back up. You can either stop out, break even, or you can, maybe book a little profit down here, and then you end up stopping out the rest. But that could have been a green trade, right? It could have definitely been a green trade. Worst case scenario at that point is probably a break-even trade. Or if you're just stubborn and you like to just accept the risk no matter what, you would have got stopped out. But it's a set risk, right? Any given trade, you have the set risk based off high of day, and that's that. But what you see here as well, and this was the one that I was actually a little bit more annoyed at versus the first one, is this was such an obvious play. We've seen this like 2 or 3 other times today already on the other tickers, where it comes up, you get a massive volume candle for that break, then the volume dies off and comes right back down into that range. I mean, you can't ask for a better indicator that this thing just didn't want to go higher, right? You get a huge push to go through, and the price doesn't go anywhere. I mean, granted, this thing went 50, what was the higher? 2033. So it went another 34 cents. But at the same time, that's in relative to what the stock was moving. That was nothing, right? That was almost nothing. And then it came right back down into the range, formed basically a descending triangle. It didn't break this candle though. This candle was at 1994, 20, it got back over 20, and then 1993. So right there's the short sell. Breaking back down. Not only are you already back down into the range, but now you're breaking this previous candle, and then look at that move down, right? Beautiful move all the way back down to 19, basically almost a full point. And I remember telling myself I should have been in that. Probably would have taken some profit off here at 1950, and then the rest off at 19, because look at these two key areas. You had the support from over here, you had VWAP, right? So the odds are this thing's going to try to hold support there on the way down. At least that's where most people are going to attempt if they want to continue to buy the stock, to try to hold it up. And as you can see, it did try, right? What's this candle? It got back up to 1962, and then ultimately it came back down. And then look over here, right? The original resistance from over here, you're going to expect that to be used as support, which it goes through, but ultimately it eventually did end up being support. It just got through a little bit beforehand. So obviously none of these lines are going to be absolutely perfect, but a lot of times they can be. So yeah, econ was definitely one that I was a little sad about. And I know that you could short it on, I mean, yeah, obviously it says it's shortable right here. So anytime it has the S on there, it's definitely shortable. And I'm pretty positive Thomas actually shorted this today, if I'm not mistaken. So, and he's also on CMEG, so it's a little interesting that you weren't able to. With 3,400 in it, you should be able to short it, right? Yeah. There's no reason that you shouldn't have. I would have loved to known what the error was, because there should not have been one. Let's see here. I've noticed that as I've grown my share size, it seems like I get targeted once I get in, but then again, I'm not scaling in. Am I drawing too much attention once I get in because of size? Well, you don't have to get personal here, but if you really want me to answer that, what kind of size are you talking about? And which broker are you using? Just out of curiosity. To give you a legit answer there. I cannot find this chart. Oh, there it is. Yeah, I remember this chart. While I'm waiting on you to answer that, here's that CSCO chart. This was a beautiful move up, and then I'm going to show you the rest of this chart here in a second. Look, previous resistance, yesterday's high. Obviously, this isn't yesterday now, but it comes up here, consolidates, and we finally break that 1 minute candle. And again, the 9 was up here. You could just feel it tried to hammer through that floor a few times, and it just couldn't go, and it started to come back up, so we took it off. And then look at what this thing did the rest of the day. So we got in over here. It just went straight sideways for the most part. Apparently it was some kind of acquisition news, and I think this was just the price point that they thought it was going to get acquired for. So that was kind of what happened there. But I thought that was kind of funny. Yes, I got that t-shirt. Say what? Am I missing something there, Thomas? Is ecom is that a t-shirt business or something? Channel Advisor Corps. North Carolina. It's an e-commerce company, obviously. I'm a little lost on that one. All right, still waiting on V8 here. Let's see, CCL. CCL was a long for who had asked me if I take longs. I think it was you, Goose, wasn't it? Sorry, laptop died. I'm using TOS, but I'm now looking to change. Looking to join Centerpoint. Are you Centerpoint? I heard if you're looking for shorts, I heard that they got a little bit worse. Heard Interactive Brokers is the place to be right now for shorts. Man. Did you hear me ask what kind of size you were using? I would assume, I guess you did if you heard the broker part. You don't have to tell me, but it would just, because I don't think you got that t-shirt as in you played ecom, I guess is what you were saying. But CCL, same difference here. Same thing right off the bottom, right? We're just looking for this 1 minute candle to break, jumped in. I was really looking for this to come back up towards 1470, but it just didn't seem to want to give it to us. It ultimately did end up getting there. I don't know that saying, Thomas. Yes, I got that t-shirt. Yes, I got that t-shirt. I don't know. It must be a Louisiana thing. I don't get it. Yeah, UAL didn't really trade much volume today. Oh, I'm a liar. 38 million. There was there was there was a stock that typically gets a lot of volume that I pulled up today, and there was like no volume. I was like, man, this thing was trading like crazy not too long ago. It's definitely not United Airlines. 38 million. I would say on a stock that's trading 38 million shares a day that your 5,000 shares absolutely mean nothing. I'm just going to throw that out there. But there are going to be stocks with lower liquidity where if you throw 5,000 shares out there, it's probably going to make a difference, right? If it's only trading a couple hundred shares at a time, every time, like at each price level, it's gonna 5,000 shares can make a difference. I don't see that could just be a think or swim thing because they suck, but I don't see 5,000 shares, especially on something like UAL. I mean, as you can see right now, there's 7,800 shares sitting here on the bid. So if you were to hit the bid, you should get filled, and it's not even gonna wipe out the bid. So, and with trading this many shares, man, look at this move. I don't remember seeing this during the day. It doesn't really look like an intense move though. Like you don't see how there's no intent. Like look at these candles over here. These are like 17-cent candles, and then these are 12-cent candles. That was the biggest candle right there, a 12-cent candle. Most of them are only like 10. That's an 18-cent candle. Was I looking at the wrong candle? Oh yeah, look, that one's actually a 32-cent candle. But yeah, that just looks a little grindy in comparison to what it could do. So that's probably why it never popped up. Coco got a t-shirt too. Dang it. Where do I get a t-shirt? I kind of want to get... I'm waiting for it to get cold out again. I'm going to buy one of the volatility trading hoodies because that's pretty much all I wear in the winter is a hoodie. So I need to get myself one of my own hoodies for this winter. Look at the past days. I don't really see any days where it would have been an issue. Not since the virus came around. You've had plenty of volume every day. I mean, even before all that happened, you were still getting 2, 3, 4 million a day. So I don't really see 5,000 shares being an issue, especially probably in the main parts of the day, like at the bell or whatever. Man. One. Chris, you jerk. Chris typing in 1. That's an inside joke from the giveaways from last week. Oh, that's funny. I was nailing an average about $2. $2. I'm confused. Am I looking at the right stock? You said UAL, right? If you were going to leave CMEG for a broker in the States with an account over 25,000, who would you use? Interactive Brokers. I save money a lot. I try to. So I try to give back everything I've earned from YouTube. I try to give back to you guys, and I've been doing that through the gift cards. Lightspeed's not bad. Interactive Brokers seems to have shorts available on almost everything. So that's my answer. And on I haven't looked into this. I don't know if you can use DOS with Lightspeed, but I know you can with Interactive Brokers. So that's another reason. But yeah, it's 100% for the shorts. Brian, the head of Intensity Stockwatch Scanners, that's who he uses. And he said he's never seen a broker with a better short list than Interactive Brokers. So that's 100% the reason. If you're long biased, I feel like it's really up to you. But I know I know Lightspeed is probably one of the better choices, especially if you're long biased, just because it seems to be one of the just the easiest, quickest, best brokers out there. It's very simplistic. Their commission structure is really good, and they're just really good at what they do. So, yeah, Centerpoint apparently used to be one of the best brokers, but apparently they haven't been doing too hot in that department lately. So, yeah, GDT doesn't really play. Like, I'm not really looking to play the low floats that often, but I will say that Brian is playing pretty much everything that pops up on the scanner. And there's so many trash low float stocks that pop up on that scanner that I see, even the penny stocks. And I'm like, man, that would be pretty cool just to throw some shares at, but I don't have them. Like, no one has them, but apparently Interactive Brokers does. And I will tell you, there are some stocks recently that I've had shares for that he hasn't. And it's very, very, very rare, but it has happened. There's been 2 stocks, I think, in like the last 3 or 4 months where that's happened. And he's just like, oh, hard to borrow. And I'm just like, really? It's easy to borrow here for whatever reason. Jag, yes and no. David, who is in here, or he was in here, he only goes long. He doesn't like to go short, and he trades the exact same strategy. Well, it's not the exact same strategy, but he likes to scale into his trades, but he does it on the long side, and the dude's profitable. I'll tell you that. He's very profitable. I do trade higher float. I'm not looking anything over 100 mil starts to get a little too high, because then the price. Let me put it like this: if let's say a 300 mil float stock makes this move up, it's very hard to make it come back down, because the float's so high. You're gonna have so many shares at each price level that if it just has like an overall bullish feel to the stock, it's just going to be so hard to bring that price back down. So in essence, the lower the float, the more volatility you can get out of the stock. So, but keep in mind that if you get too low, like I'm talking 10 million or below, you start getting in the float rotation, you start getting into just not a lot of liquidity, and the price can really move, and you've seen that. That's why a lot of the big gurus and stuff, they always talk about trading low float penny stocks, because they can go from $3 to $20 like it's nothing, and it's scary. And you don't want to be caught on the wrong side of that. So, and they're very unpredictable, right? That's why I avoid them. I'm not here to get rich quick. I'm here to make a living from trading stocks. So if I can find a nice middle ground to where I can consistently predict what these stocks are going to do, then so be it. Now, Brian is the same way, but when these low float penny stocks, or whatever you want to call them, pop up, he'll throw some smaller share size at it, knowing that the probability of it coming back down is just as good as a mid to higher float stock. You just might have to fight it a little bit, right? And not fight it, but you might have to just play the stock a little bit longer. It might go against you a little bit, and you have to scale in. And I always say this: there's a huge difference between scaling into a trade versus adding to a loser. A huge difference, and a lot of people don't understand that. They see a chart and you just have like 3 arrows going up, and you're like, oh, you're adding to your loser. It wasn't a loser. I was expecting it to possibly continue to go, so I scaled into my position, waiting for the almost inevitable pullback, and then I took my profits. So there's a huge difference between scaling into a position and adding to a loser. Now, if this thing, say you scaled into a position and this thing just went sideways and then broke the highs and started to kind of grind up, and then you started adding up here, that could be considered adding to a loser. And you're just trying to not lose in the trade, and you're trying to get to come back down. That's how you can blow up. So I always say, just have a strategy, right? Have a strategy that has a set risk. If you have a set risk, that you can only lose per trade is that set risk, then you can't go broke, right? Because I would hope that set risk is only up to maybe, if you're crazy, 5 to 6% of your account on any given trade. You should never be risking more than that, because any one loser should not be wiping out your account. And trust me, I'm speaking from experience. Don't do that. It sucks. It really sucks. That's quite interesting. So the Twitters stick on a pattern up or down. However, the low floats tend to come down. I'm so confused at what you're saying there. That's the ticker symbol for Twitter. That's quite interesting. So you'll have to re-explain that one, Chris. Yeah, MD Band 22, welcome. First of all, I don't think I've said hi to you. I agree. You should never risk more than 1% of your account on any given trade. But if you are going to get crazy and you know that your strategy is 80, 90% win rate, like if you have a percentage, a 90% win rate on your trades, you can risk a little bit more, right? Because you know that you win more often. But at the same time, you can't go past that point. You can't say UAL is moving up and your stop after it consolidates should be at high of day, and it makes a quick move up through and you're like, oh, it was a quick move, I'm just going to add into it because the odds are it's going to come back down. No, take the loss and get back in, and then you can reevaluate the trade after that. And then I always say, if you get out of a trade, would you get back into that trade, or would you take that second trade if you never took the first trade? Always ask yourself that question. It'll keep you from revenge trading. It's seriously, write this down. It's one of the best things I ever did to myself was, would I take this trade if I never took that first trade? And I can't tell you how many times the answer would have been no, because I said, okay, it stopped me out. It wasn't necessarily I want to get my money back. It was, okay, this thing's still extended. It's still extended. It's going to come back down. And I would just take whatever entry I thought was good. It was just like a little break, and it kind of grinded or whatever, and I just jumped back in because I was like, okay, it's extended. This is the move back down. I respected my stop loss here, but I still want to be in this trade. So I would jump back in. But if you step back and you look at the chart, I never would have took that trade if I wasn't already looking at the chart, right? So always ask yourself that question. It's such a great question. Would I take this trade if I never took that first trade? If you get stopped out of a trade on your first attempt, step back. You can also set a timer for this too. You can set like a 5-minute timer. If you're looking at a 2-minute chart, make 2 more candles go by. Like, come up with a system to where you make yourself wait and reevaluate the situation before you just jump back into a trade. Because I can't tell you how many times I've done that and I've lost more money because the stock just ended up grinding or whatever it may be. It's just such a great question. Always ask, would I have taken this trade if I didn't take the first trade? Such a great question. Okay. Twitter is a high float, so it sticks to a trend line more often than not. However, the low floats, like you said, inevitably come down. Yeah, I mean, using Twitter as an example, I know what you're saying, and it is true. Like I said, the higher the float, the harder it is to change directions because there's just so many shares. There's so many shares there that so how I explain float to people sometimes is, imagine a stock at $10. So you got 10 on the bid, 10.01 on the ask, and the float is 10 million. Well, under 10, out of the 10 million stock, the 10 million shares available of this company right now today, there's only, let's say, 8 million available because 2 million of that 10 million are being held by just people that are either long or short long term. Then take another, say, like 5 million of those shares that just aren't, or well, let's just take, no, we'll just stick with the 8. So say there's 8 of the 10 left. So there's 8 million shares to be traded of that stock, and we're at 10 and 10.01. Well, say of those 8 million, no one wants to buy until it comes down to 9.80. Well, guess what? If that bid at $10 gets sold through, it's going to go right to 9.80. But, and it could go the same the other way. Say at 10.01, the next ask, the next price that someone is willing to sell their shares is at 10.23. Then when someone goes through 10.01, it's going to go right to 10.23. Well, when you have a 100 mil float stock, like Twitter, I don't know what Twitter's float is exactly, but it is higher. So now we're at 10 and 10.01. Well, there's almost always, since there's now 100 million, say those, like, say even 20 million of those shares are locked up for long-term investors. So now there's 80 mil left in the float of the 100 that are available. Within those 80 million, there's almost inevitably going to be somebody at each price point. So somebody that, say, sold up at 10.30 is now going to sell down at 9.99. People buying at 9.99, might be scalping at 10.01. Like, there's going to be people, because there's so many shares available at each price point, which makes it harder to move the stock up and down. But if the lower float, obviously that thing could go from 10 right to 9.80 all the way down, 10.01 to 10.23. Like, it can move so much faster because there's not enough liquidity and people trading the stock and shares available at each price point, because there's not enough people there offering those shares. So that's kind of how I try to explain float in layman's terms. Like, if you were a 5th grader or however, explain it like I'm 5. And that's really the best way I can explain it. So that's why I always say, if you get too high with the float, I tend to stay away from those sometimes, because it's that much harder to make the stock reverse back down. And that's when, on something like Twitter, you would look for something like an actual technical pattern, because these kind of go more off of technical patterns more so than low floats. And that's why I always say low floats, people are like, oh, low floats follow technical patterns all the time. Well, for every low float that you can show me follows a technical pattern, I'll go find 3, 4, 5 that don't, because those things can be manipulated so hard. It's not even funny. And don't even get me into manipulating low float stocks. I don't want to go down that road again. All right. High win rate, go bigger with risk. Yeah, and I agree with that. The higher your win rate is, the more you can risk. But you always have to keep in mind, if you're 90% win rate and you're risking 5%, if you're making 1% per trade, that means 1 out of every 10 you're going to lose 5%. But if you're making 1% the other 9 times, you're coming out 4% up, right? So that's the idea. But if in those 9 trades you're only making, say, 0.5%, now you're actually a bit of a loser, right? You lost 5% on that one trade, but you only gained 3.5%. So when you have the higher win rate, make sure that it still applies. And that was one of my big problems, is I was taking smaller profits and bigger losers. So I could win 15 trades in a row, and then I could have a 95% win rate, and then I lose one trade, and it almost wipes all of that out. So you always have to keep that in check too. Would I marry her again? What? What are you talking about, Vincenzo? Why can we say it is inevitable? Well, I don't want to say it is inevitable, because you don't really know what a stock's going to do. One thing that I've learned from Mark Douglas, rest in peace, it wasn't recent, but I'm just saying, once you get into a stock, once you hit the button and you're entered long, short, whatever it is, into a stock, you lose control after that point. You have zero control of what that stock does next for the next however long you're in it. You have zero control. The quicker you can realize that, and the quicker you can get that into your head, the better off you'll be. The quicker you'll start to realize you can step back and read the chart and see what everyone else is doing to affect the chart after you got into it. Don't get into it with a bias. I mean, you can enter a trade because of a bias, but once you're in that trade, don't continue to have that bias. Step back. Act like you're not even in the trade. What does it look like it's going to do? Right? That's how you have to look at a chart. The quicker you can realize that once you're in that trade, you now have zero effect on what that ticker does. Zero. Right? Unless you buy or sell more shares, you have zero effect on what that ticker does from that point on. Realize that. Step back and then start to read the chart, because that's all you can do at that point. Follow your strategy, determine what it's going to do, follow your strategy. It's that simple. Adhere to your risks, your stops, all that good stuff. But never assume and be just completely biased. Like if something pops up against you, you're like, oh, I'm short biased on this. It's going to come back down. Well, guess what? The chart might be telling you something completely different, and you better listen to it because, like I said, at that point, you're just along for the ride wherever it goes. So you have no control over it. So lose that bias real quick once you get into that trade, because if the chart's telling you something different, listen to it. Because unless you and one thing that Mark Douglas says is, he tells a story about a guy who said he walked into a meeting with some guy. I don't know. He's obviously he had a lot of money. And this guy said, "Oh, let me tell you about this stock that I just bought." And I think he said he short sold it. He was like, "I short sold this stock at," we're going to say, we'll use Twitter as an example. "I shorted it at 38.20, and I can guarantee that this thing is going to close under 37.40 today." And the guy's like, "How can you guarantee that?" And he was like, "Oh, I just know. And the guy's like, "You know?" And he was just like, "Yeah, I just know. You can tell just the way that the chart's moving, the technical patterns. Like it's going to go down to 37.40 by end of day." And the guy's like, "How much you want to bet?" And the guy's just, and I don't remember exactly how the story goes. I don't even know if they actually bet, but they make the bet supposedly. And the guy picks up the phone and says, "Buy as many shares as you have to to make it go over whatever price point it was." And he did it, right? So what Mark Douglas was getting at there is, it literally only takes one person at any given time. It only takes one person. Once you're in that stock, it could just be one person that completely changes the stock for the rest of the day. That's all it takes. One person. Think about that. Think of how many shares are going through the market on a daily basis. Think of how many people are trading the market on a daily basis. And now think that just one person can completely change the outcome of a stock for the rest of the day. Let that sink in. Like, seriously think about that. Let that sink in. I'm just reiterating the point that when you get into a stock, that's it. Your little bit of possibly affecting that stock at that given time, whether you bought or sold, is now over. You did it. That was it. You're in the stock. Now, grab the rails, grab the things that my wife always grabs when I'm driving, and hang on. So, yes, it was trading in the zone. The quicker you can realize what I just told you, the quicker you will get to the next step in your day trading. Seriously, it is such an emotional leap once you figure that out. Once you realize, okay, I'm short here, I'm expecting it to go here, blah, 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 blah. The quicker you can realize that just because that's what you want it to do doesn't mean it's ever going to do that. It could, and you were right. Good for you. But it doesn't mean it's going to. And the quicker you can realize that, the better. That's all I'm getting at. Okay. Anyways, hopefully that sunk in for a couple of you, because I really got deep there a little bit. And if you want to watch or read, whatever, it's Trading in the Zone by Mark Douglas. Amazing book. He does some workshops on it as well if you like to watch like I do. I can't read books. So you can. I have it in my education section, my education playlist somewhere on my YouTube channel. Okay. What I would tell myself when facing a loser is, do you want to lose 3K now or 5K later? Getting out for a loss was the hardest part for me. It is. And no one wants to lose, right? Nobody wants to lose. The whole point of doing this is to make money, to win money, right? So nobody wants to lose. But the quicker that you can realize you're just not going to win every trade, the quicker you can realize this is a marathon. You're looking at a series of trades over the course of a lifetime, not just one trade, right? Don't get so focused on one trade. Set your risk parameters. Follow your risk management. The two things, you guys hear me say it all the time, the two things I preach the most on this channel are risk management and consistency. If you can consistently control your risk management, you will not go broke. You will not blow up unless you are a horrible trader and your strategy just does not win. And then that is a whole different story. But if you have a strategy that you know can be profitable and you keep your risk management in check, you just should not be able to blow up as long as you started with the correct amount of capital. It just should not be possible, right? If you're only risking 1% of your account every single trade, it would literally take you 100 trades in a row to blow up your account. Do you really think you're going to lose 100 trades in a row? Now, granted, that's not including fees and commissions and all that stuff, but you catch my drift. But yeah, that just to follow up on that V8, just accepting a loss is hard. It's hard, but you have to do it. Remember, it's a series of trades. It's not all about that one trade. Let that trade go, move on, and hopefully if you're losing 3,000, your winners are somewhere close to that. Can you show how to make an auto stop loss with set percent of your account or price? What do you mean? I have my stop max button is set to a dollar amount. So at any given time, if I'm in a position, I have it set right now, I think to 150, but I won't be using this right now with the new strategy. But what this is for is at any given time, if I'm in a trade and it's going against me, I can hit the stop max button and it'll put a stop in wherever $150 would be. So at any given time, if I'm ever down $150, that's where my stop would be. And it'll figure out obviously where it goes for you based on your share size. Many high floats follow the SPY. That's true. Albert Ding, if you don't follow him on YouTube, he's also a counter trend trader. And I've always had the SPY up, but I never really thought about it like he did. And it only took him saying what he thinks of the SPY and what he calls it to really kind of hit home. And he calls it the wind. And it makes total sense. And I'm going to start using that because it's so true. When you're watching Twitter and then you pull up the SPY, like look at Twitter's chart. And then when I pull up the SPY, look at that. It's almost the same. So if the SPY is going down and Twitter looks like it wants to go down, the odds are the wind is blowing down. So Twitter has a higher probability of going down because you're right. That's kind of how it works. So if you're looking to trade mid to higher caps, a lot of those do kind of go with the SPY. So I always keep the SPY up. Like if I go full screen, you'll see down here in the bottom right that I always have the SPY up. I always am checking the direction that the SPY is going because it's true. It does affect the way that your stocks are moving. It's just how it is. Did I have my? Oh, I took my. I don't know why my face is off there. Hold on one second. There we go. I don't know why that was off there anyway. Wind or rivers or streams, yeah, whatever you want to call it, but it is very true. Funny, actually traded Twitter yesterday and made 1.5R, trying a different mix of low, mid, and high floats. Notice on the high float, the larger time frame analysis is useful for resistance support area. Yeah, it's something that I'm really bad at is looking at higher time frames, but it's so true. Jared from Live Traders on YouTube, he actually made a very good analogy for this. The analogy is if you're looking, think of a forest, right? If you're looking at the 1 minute and you only look at the 1 minute, you're basically in the forest and you're looking at the branches and leaves of a tree, or you're just looking at like the leaves on a tree. Then you scroll out to the 5-minute. Now you're looking at the branches, and you can see the leaves on the branches. Then you scroll out to the 30-minute, and now you're kind of looking at a couple trees all at once. Like you can see a few trees, and then you start to go up into the sky, and now you're starting to see the overhead of the forest, right? You can see the whole forest from above, and the further you zoom in, you can start to see the inner workings of the forest. So basically what I'm saying is there's no problem trading intraday, looking at the 1 minute or the 2 minute or the 3 minute, whatever you want to use. But it never hurts to back out and just look at the bigger picture. Come out, look at the bigger picture. Look down on the forest, and then kind of zoom yourself in. Okay, I see the big picture. Now let's go into what I'm really focused on. I see that tree right there in the forest that I want to go down and focus on. All right, let's go down into it. Okay, now I'm at that tree. Let's look at the branches. Okay, I'm looking at the branches. Okay, I want to see that leaf. All right, I see that leaf. All right, I'm looking for the holes and all the veins in the leaf. Like, you get the point. But yeah, it can help a lot. And even with my strategy now, daily resistance and support is a very big thing, right? If like, let's take a look at, I think it was it RCL? No, it wasn't RCL. NRG. God, it's so buggy. Yeah, it was NRG. So I drew this line up here at 34.67, and I was really hoping that we got up there. And as you can see, it was a nice resistance area up here. But as you can see on the chart, when we were making that move, it couldn't quite get there. So it is what it is. But we also, that's the advantage too of having the strategy the way that we do it. And if you're playing 1-1-2 or 2-1-1, however, if you're playing the front side, you can start positions. And by looking at the daily, you can kind of get an idea and risk based off of that daily resistance, right? You know that you could start the position here because it's really extended. You ran into yesterday's high. It's struggling. You can start the position there. But know that if you're scaling into a trade, you know that up to that 34.67 area, there's a good resistance there that you might have to scale in up to that point, right? So you apply your risk parameters to that. There's so many different ways to trade. It's ridiculous. Whatever you can find that works for you is the best, right? Can't say that enough. What I do might not be the best for you. What you do might not be the best for the person that wants to get into trading and has no idea what trading is, and you start to teach him what you're teaching him might just not be what he's into, right? So everyone has to find their way. I say that all the time. There's thousands of ways to make money in the market. You have to find the one that fits you the best. There's breakouts. There's trading like this. There's trading the front side. There's trading the back side. There's trading support resistance. There's ascending triangles, descending triangles, head and shoulders. Like, you have all those technical patterns. You have RSI. You have MACD. You have VWAP. You have all kinds. You have all the EMAs. There's so many different things that you can do. You can swing trade. You can day trade. There's just so many different ways to make money in the market. It's ridiculous. Always find what works best for you and be consistent, right? Consistent. Do the same thing over and over and over again. All right. Man. I'm not comfortable yet with the low mid floats yet. They can whip. Yeah, they definitely can. MD band. Does that mean you're a band in Maryland? By the way. GDT, you had a small wipeout. Is GDT in here? I haven't seen him post for a while. Yeah, he had an interesting day the other day. The button will buy at limit and a set price you're willing to lose, say 150. You can do that. Like, I had a button like that, which I'm pretty sure I could find it for you, where you can get long or short a position, and then it'll place your stop at that set loss based on, say, 150. You can do that. Can you show all your stop formulas? Oh, yeah, sure. So this is, here, I'll just put them in chat. Man. Let me catch up real quick so I don't spam away from these. Sorry for the random question. Sorry for the random question. The drink is kicking in a little bit. But for CMEG, what's the major difference? My God, my nose. What's the major difference for someone who is living in the U.S., me, than someone not living in the U.S.? Is there something special I need to do? No. You just apply as normal. The difference between someone in the U.S. and someone not in the U.S. is that CMEG cannot actively advertise to you. So how do they get around that is they have affiliates to kind of do it for them. And even I am not allowed to directly advertise to you. I can only recommend to you. So you'll see that I don't have like a CMEG advertisement on my channel. I have like reviews and recommendations and stuff like that. So that's their way of getting around it because they can't legally advertise to anyone in the United States. And I'm sure that's based on U.S. regulators telling them that they can't do it. And yes, yeah, the PDT rule is an advantage of going with CMEG. But I think that most people that are looking to sign up with CMEG, they kind of get that. Okay, these scripts. All right, so this one is stop at high of day. Stop at break even. Well, TradeNet was using CFDs. CMEG trades actual shares. So they're not doing anything wrong. Like they pay their fees to the stock exchange. So when they trade their shares, you'll see the ECN fees. You'll see all the other. Let me see what they're called. I can just show it to you. Like you can see all the fees that they pay, and they pass them through to you because they're not going to pay them. So you got the ECN fee, the SEC fee, which is the SEC, and there's a TAF fee, TAF, and then whatever MISC fee. I'm assuming that's for them. But yeah, so you're actually trading shares. The only thing is, like you can use, like if you come here to here, where limit is, you can choose to be direct to market, but you're going to pay the $3.95 per ticket instead of the $2.95. But if you just use limit market or stop or the SAGs or the smart route ones to get the cheaper commissions, the $2.95 commissions, it basically it's using a different route, and basically it's a route that is just as fast, but it's more of a, I'm not going to say it's a black pool or what are those, dark pool. I don't know why I said black pool. I mean, it is dark. Black is a dark color. So it's not something like that, but it's basically like an off-book broker kind of sort of market thing. I don't know. I don't really know how to explain it, but it's almost like I'm pretty sure it's an in-house thing. Like when you use the smart routes, I'm sure it's something that they have set up kind of in-house. So you're almost buying shares to and from them. And that's how on, what ticker was it? Was it RCL? Yeah. That's how on a ticker like this, where I got filled on the bid at 51.73, but look at the candle. The low of that candle was 51.75.5. So it never printed down there. But on the bid on level 2, when I hit the button, that's what was showing. So that's what I got filled. And they're just when you use the smart route, it's definitely doing something in-house, but they're not CFDs. So yeah, BE is break even. Yeah, smart routed orders. So however those work, I'm not exactly sure, but I'm pretty positive they're obviously not direct to market. So if going long, the end would be sell equals send. Let me make sure. Yeah, these are for shorts. So you would change for stop at high of day. You would have to change where it says stop price. Stop price would equal low, LOW, instead of HI. And that's it. That's all you would change. and it would obviously be stop at low of day, not high of day. The buy, and you would change buy to sell. You're right. I forgot. Sorry. So here, let me just, I'll change it for you. So stop at low of day. It would be this. I'll give you the other ones too. I was just explaining that. And then this would be sell. And then for the stop at break even one, I guess, oh yeah, it would still be sell. So if you're copying these down, that first break even one is for if you're short. Okay, and that's right. And that's, I put if long for that one. So the stop max, can you run the command for stop at set price, say 150? Yeah, that's what this one is right here. Stop max dollar amount. Short. All right, so that one, that's if you're short and it's the dollar amount. So the only thing you would change for this is the 150. You just change it to whatever you want your stop to be. So if it's $50, you would just make it 50. If you want it to be $1,000, you change it to 1,000. So whenever you're in a position, you would just click that button and it will put a stop at wherever that dollar amount would be according to your current average price. Any good psychology books or material you're working with? This is the area I'm hurting the most. Trading in the Zone by Mark Douglas. That should always be your first book when it comes to psychology. Honestly, it might be the only one you need. It's the best one. It really is. I mean, I'm sure there's other ones out there. I haven't listened to them, so I can't tell you what's better, but the one that comes up the most from every professional trader I've talked to, it's literally what everyone says. So I recommend, if you've already read Trading in the Zone, reading Trading in the Zone again. I'll just have to add buy or sell send. Careful what? To change this one, it might be a little bit different because you'd have to change the average cost and all that good stuff too. I don't want to change that one here because I'd have to test it. I don't want to give you something bad. So for now, the stop max one, I'm only going to give you the short one. But if you guys really want the one for long, I could try to figure that out. Is there a way to send an order from the chart itself? No, but you can. I don't think so. You can double click to get the price. So like, see how there's no price in here? If I double click up here, it'll give me the price. A lot of professional traders that don't use hot buttons, they do it the old fashioned way. You'll see them, like say they're really interested in a trade. Like say this is coming up to 5240 and they want to get short. You'll just see them like double click the chart there, and then they'll like roll their position size or whatever, and then they'll just hit the button. Like that's how they do it. You won't ever see them. I mean, granted, if you clear this, you can do that with your mouse wheel. So like say the current price, you want to just jump in, you can literally roll up your position size or share size here, and then just roll down here real quick, and you're good to go. I don't see I don't double click the chart, but the option is there. But you do have to actually go in and change that chart area, config area. Nope, wrong one. Right click, configure, and then it's over here somewhere. Yeah, right here. Double click to trade. Just make sure that's checked. Tim is writing script, obviously not drunk enough. I am starting to feel this, Albert. I was actually just talking about you earlier, Albert. I was mentioning how when I heard you talk about the SPY being the wind, It really was a little bit of a light bulb moment for me. Not that I didn't know that stocks can move with the SPY, but I never put like two and two together that you could really use the SPY as like a general direction finder, I guess. See, I'm mixing my words up. Chris, you can do that. That's what I do. When I hit and Albert, I don't know if you've noticed, but look at my montage. Can you see what I call the strat? You should feel so honored. Basically, I'm gonna just give you this one, Chris, and you can toy around with it. Short the bid, set stop at 25. Set stop at 5-day for $25. Oh, man. All right, so it's not letting me. I might have to break this up. Let me do that and then try. There we go. So what this does is it's going to take the current bid. It's going to enter you into the position. It's going to calculate how many shares you would need in order to stop out at high of day to equal $25. So if you wanted to change, say you want to be 1 cent over high of day, you could change it to high. Where is it? Stop. So where it says stop price at the bottom, I don't have the one for. Oh, I do have the one for long. You're right. I did add that. So what I did, you would just like if you wanted it to be 1 cent over or 1 cent under the high and low, to the where it says market then stop price equal high, you would just put high plus 1 cent, and then for the long it would just be low minus 1 cent, and it'll calculate that in. But I like to use high of day because I can't tell you how much slippage I've been a part of when I use the high of day. It's so bad. There was one time I remember I got like 60-cent slippage on something that just rocketed through high of day, and I was like, yeah, I need to figure out a better way to do that. And most of the time you'll see me, I'll manually exit a trade, usually like right before high of day. Like if I can read that it's probably gonna go high of day, I'll just jump out, and I really just have the high of day in there as a precaution, just to make sure, like if it spikes through, at least I'll get out. Long the ask with set stop at low of day for 25. Are you just now seeing it, Albert? I feel like Albert, I found Albert, what was it, a month, maybe 2 months ago at this point, and I don't know what it was, but I've been trading the front side this whole time, and I didn't mind it. I just never felt like it was completely what I was looking for. It wasn't my end game. Let me correct myself. I think that the 1-1-2, like at scaling into a position, I do think that is my end game. But when you're using a smaller account, it's really hard. It's really hard because you don't have that extra risk tolerance available that a bigger account has. So you can't really, risk what you want to risk is what I'm getting at. So what I'm getting at with that is when I came across Albert, I found he was killing it. Like he was just basically taking these same moves, literally the same plays that I was playing on the front side, and making it look so easy to just crush it on the backside. And all this time, I'm like, what am I doing? Why would I not just do that. It's so much easier. It's like it's set risk, right? You can use high of day every single time. And if you're right, look at where your average is, right? Your average, imagine playing this on the front side and your first entry was down here, right? It was a pretty good move at this point. And then you start scaling into this. Say if you 1-1-2 and your average is right where you got in, playing the backside, well, guess what? You had zero stress on the way up and you got the same average that you would have if you played the front side. It's one of those things that it just, I don't know. It was like, what? Why am I not doing this? And so I think I've watched every one of Albert's vlogs where he traded live and like showed you his live trades. And I was just astounded. I was like, I need to start looking into this. And so I did, and here we are today. So a lot of what I'm doing right now is because of Albert. But at the same time, don't get me wrong, you can't do necessarily what Albert does without having the knowledge of how stocks are reacting, how the price action works. Like there's still an art to it. I'll never say that day trading is not an art, because being able to read price action can not only make you more money, but it can save you money. Like my NRG trade. Let's go back to that one real quick. So I can't tell you how many times that, or was it TSM, sorry. No, or it was the RCL trade. I had it up. So I can't tell you how many times, right? When I got into this first trade, I was looking for the 50 fib, and then possibly VWAP for some remainders. The second trade, it got rejected. How many times have you seen on a second rejection or sloppy seconds when it comes, say it came down, came back up, made a lower high, and how many times you see it go much lower? Even after a rejection of trying to go high of day, again, usually you see it go much lower, right? I was expecting just that. I thought I had an amazing entry here, and I was going to make, in my head, I'm running to the bank on this one, right? Had the previous resistance from yesterday's high up down here at under 51.50. It was close to 51.40. The 50 fib was sitting here at 51.05. VWAP was all the way down here at 50.80. I was astounded with my entry. But guess what? You could just tell when this thing came down that it didn't want to go lower. So if you are someone that just wants to get into a trade and set it and forget it, and you said, okay, I got a great entry, I'm going to put my take profit down here at the 50 fib, like that's your strategy, that's your robotic strategy, then guess what? This ended up being my biggest winner of the day. It ended up being, it was my biggest winner of the day, 2 times bigger than my TSM trade. And it never would have happened if I just set it and forget it. It would have ended up being another loser, just like the first trade. So a lot of trading is strategy. A lot of trading is having a profitable strategy. But there's going to be times where your intuition and the way that you read the charts, the way that you read the price action is going to make you more money, and it's going to save you money. It's just going to happen. There's also going to be times where you're wrong. And the idea is to get good enough to where you're right more than you're wrong, right? That's the whole point of this in the first place. Find a strategy that is right more than it's wrong. Find a strategy that makes you more money more times than it loses you money. And then when it comes to intuition or feel for anything, make sure you're more right than you're wrong. It's really that simple. But how do you do that? How do you do it? And any real trader will tell you time. And that's why we're here Friday night. That's why the people that show up on Saturday nights that want to be part of that, we're the ones that want this for real. We're the ones that are here putting in the extra work, the screen time, the time. The time is what makes it happen. The more you do something, the more you start to understand it. The more charts you see, the more price action you see, the more everything you see, you just learn from it. The more patterns you see, the more times you see it fake out at high of day and then crumble down. The more times you see it make lower highs and crumble down, the more times you see it do anything, you start to pick up on the patterns. You start to see what the norm for a chart is when it does this, when it does A, Y, and Z. So that's all. That's really all I have to say about that. That's all I really got to say about that. But just time, all the time. It's not a blog. It's his vlogs, the video logs, and you just have to go on his YouTube channel. He's got a bunch of them. Albert's here paying his respects. Don't you know who I am? Dab. That was cringe. But with that said, if you guys aren't high-level support members, hit the join button down below. Join the high-level support, and we can do this tomorrow, 9 p.m. Eastern to 10 p.m. Eastern, an hour strategy talk. Doesn't have to be my strategy. It can be your strategy. It can be anyone who shows up. It can be their strategy. We're going to dive as deep as possible, and we're going to figure out how to make those strategies more consistent. Make sure you got proper risk management in place, and we're just putting in the work, right? Tomorrow is all about putting in the work. You can set a stop and profit target at the same time, right? Yes. Once one triggers, the others will be canceled. Yeah, that would be considered a range order. So say you wanted to put a range order. So say I had a position at like 52 for 100 shares. You would come here, do stop. Now, let me back up for a sec, because not a lot of people are going to have the stop part on their montage. So what you have to do to get that is you right click on in an open area on the montage, go to style, and then go to stop order. I don't know if you can see that. Let me right click over here. Style, stop order, because I think yours is going to be set the default, and as you can see, it doesn't have that. So find an open spot in there, style, stop order. This will come up, say it's 100 shares is your position. You go to stop, go to range, and then you're going to put the low range in, whatever you want it to be. So in this case, say we're short. We want to take profits if it gets down to VWAP. So we'll put it at 51, and the high range we want at high of day, so 52.42. And then you would hit buy, and it will put an order at both, and when one gets hit, the other will disappear. Hey, happy Friday from the wedding, Kevin. Attaboy. You never told me earlier, what happened to the cake? You said that the cake was like destroyed or something, but you never told me why. I asked you and you just, I mean, maybe I missed if you did say, but I didn't see it. No problem. Awesome places. Man, this drink is so good. I made it nice and strong tonight. Anytime it's more blue than green, like see how it's a little more blue tonight? That means there's a little bit more liquor in it. Well, Albert, I don't think I'm going to get there. People aren't making me take shots tonight. We actually had a pretty productive session tonight. I was actually surprised, I should say. A new one is being picked up tomorrow, just from the heat. It just all slid apart. Gotcha. A lot of fondue in the heat. I didn't know how to put hard stop on CMake. Well, now you do. Yeah, a lot of people don't know that you can put that on your montage. It's like one of the best things you can do. And there's different styles too. Like if you use range orders a lot, you just hit the OCO and it'll put up your OCO order thing down here. So you can always have it up and ready to go. There's all kinds of different ones. I don't know what all of them are. I think trigger might be, I don't know what trigger is. option is for options. So obviously that's just built into DOS for people that offer options. Full, I guess full is, oh, I thought full was going to be like everything. But yeah, stop order is the one that I have because it's what I use the most. Why do I use a VPN? Oh, why not? I'll send you a pic. Let's see. Ooh, that's the one that got ruined. Ouchie. Looks like you tried to cut a piece out. Oh yeah, you can see how it slid right off of there. That doesn't even look like any fondant. It's just all icing. That buttercream got a little too melty. Is there jelly in there? Got some jelly? Cake. I love cake. I mean, I use a VPN because I feel like you can never be too safe. Even though I've shown my address on here before. Silly me. I always tell everyone, I have a pretty good security system. If you want to break into my house, be prepared. I don't know if you guys know what if this then that is, but I have it set to where if my alarm goes off, it will automatically call the cops. The siren will obviously go off. The motion sensor in the corner is set right to the front door. It'll take a picture of you as the door opens. And it will also turn on these lights. So when if you immediately somehow came in the door and like you knew what you were about to do, like run upstairs or whatever for whatever reason, I have it so these lights turn on and those lights upstairs don't, so that when I'm looking down the steps, you have a hard time seeing me, but I can clearly see you. Like I have the whole house basically rigged so that you're in trouble. I have a siren on the roof too. So when the alarm goes off, like everyone on the block, at least, not the block, but the street, is definitely going to hear it. So it would just be a bad house to break into, is all I'm going to say. And then if for some reason you get past that, and yeah, I can see you and you can't see me if I'm looking down the steps, what you can't see is something aimed at you. And I'm pretty good with it. I practice with it quite often. Funny story, I was going to take a piece off and eat it, but then I thought, what if they don't get a new one ready and we somehow have to make that one work? Yeah, that would have been funny. My system is not... Wait. First off, wireless is actually not bad. And I know why you're thinking it wouldn't be, but I also have my entire system hooked up to a battery backup. So you can cut the power all you want. I mean, there's absolutely no reason for someone to come break into my house. But if they did, I have a pretty good setup. Like it would be pretty tough. I mean, you could obviously break into the house, but you're not going to break into my house without me and the neighborhood knowing it, is all I'm going to say. I do game on a VPN. You just have the wrong VPN. You have to, I mean, if you want a good VPN, you got to pay for it. That's all I'll say. But there are plenty plenty of good VPNs out there that aren't going to limit your bandwidth. Did you guys know that there's YouTube Music? And apparently they linked with Google Play Music. I didn't know that until today. All right, do we have any more questions? I feel like we had a pretty good session. I feel like it's kind of dwindling down. I might try to get a game of Valorant in before I head up. I'm thinking MDK3. It's kind of funny. My brother, I'm not. I won't get into it too much, but my brother is actually who got me into security when it comes to the internet a little bit. And I'm not the most secure person because I don't really have anything to hide. And he's always telling me that's not the point. And so yeah, I basically do that kind of stuff really just to appease my brother, to be honest. Yeah, it's fun. I tend to go down the wormholes. I do. I'm that guy who knows a lot about, or knows a little about a lot, but I don't know a lot about like one thing. But that was my entire life. I've finally, I can't tell you, my entire life I've always wanted to just own my own business. It's been my dream growing up, is to own my own business. And it always seemed impossible. I was never, we weren't a rich family, so I knew it wasn't going to happen that way. I didn't go to college. I never was crafty enough. Like, I was never imaginative enough to like start a business or do anything like that. I've always dreamed of kind of starting my own business. And it just seemed like it wasn't in the cards for me, right? I ended up getting a government job. I was there for 10 years, and really getting my wife pregnant was, I guess, if there are blessings, a blessing in disguise. Because we had the first kid, and then we said, okay, well, our plan all along was when we have the first kid, we want to have the second kid right away so that they're close in age and they can grow up together. So we had the second kid, and once we had the second kid, we realized to put the second kid into daycare, it was going to cost more than I was getting paid a month at my job. And so we made the decision that I was going to just stay home and watch the kids. And so while I was home, in those first couple of years, I had a 2-year-old and an infant, or a 1.5-year-old and an infant. They didn't really do much. Like, I wasn't playing with them all the time. It was more so just taking care of them and then sleep and then take care of them and then sleep and stuff like that. And so I felt like I wanted to find a way to try to help out besides doing stuff around the house. And so I started just trying to figure out a way to make money. And so I started looking at ways to make money online, the typical stuff like that. In my wildest dreams, I never thought I'd be sitting here talking to you guys with the idea of trying to day trade for a living. But I can't imagine. It was probably like the first 3 months I was just like, okay, I do this all the time. I start a new job, or I have an aspiration to do something, and I say, this is it. This is the thing that I'm going to be passionate about the rest of my life. This is it. This is it. Whatever it was in that moment. And I felt like I caught myself when it came to this as well. And I think I just related to day trading so much. I picked up on so many things that are required to be a good day trader because I was a poker player for a long time. I played poker I still play poker, but I played it pretty hardcore for about 12 years. And I was making pretty good side money doing it until online poker got shut down, Black Monday, blah, 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 blah. But a lot of the things from playing poker translate to day trading. Risk management, being consistent, like those things actually correlate to day trading. But anyways, I kind of caught myself thinking, okay, I really like day trading. This is fun. You can make a lot of money. Like, this is what I want to do. And I caught myself. I was like, oh, I'm doing it again. I'm saying this is what I want to do. 3 months down the road, I'm just going to, fizzle out of it and blah, 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 blah. Well, I didn't have anything else to do. So I kept doing it. And then I kept doing it. And then I kept doing it. And I started to learn. And I started to do this. And I started to do that. And then I'm started meeting some people. And then I met Brian. And I started the YouTube channel. And then I kept learning, and I actually started to get kind of better at it. And I started to figure some things out that I clearly couldn't figure out before. Things start, and again, this goes back to what we were talking about earlier, screen time. So just by staying at it and doing it over and over and over again every single day, just by looking at the screens, looking at the charts every single day, you just start to pick up on it. It's like any other new job. When you start a new job, if they're using a specified software that you've never used before, you're not going to know how to use it the first day. You're not going to probably know how to use it very well after a couple months. It's going to take a long time to perfect how to use something. So this was no different. And it's just like anywhere. So I really feel that now I am to the point where I'm at least break even. I feel that I am a profitable trader on a smaller scale, obviously. And really, once we get super confident and we can really start to scale up, that's it, right? I always tell everyone, if you can make $50 a day, if you can make if you can make $20 a day every day consistently, you can make $200 a day. You can make $500 a day. You can make as much as you want. All you're doing is scaling your share size. Everything else stays exactly the same. You're trading this chart the exact same way, regardless of what your share size is, right? Especially on liquid stocks, right? You got to make sure of that, right? If you're trading 50,000 shares, obviously you probably can't do that, obviously. But anyways, that was my spiel. Hopefully you guys liked it. All right, let me catch up. Sorry I'm late. It's all good. Welton, we're actually kind of closing down here. Yes, do you get drunk doing this every Friday? No comment. Some Fridays are worse than others. Thomas, I'm about to delete you from the channel. Thomas said, what are your thoughts on trading options? Options are dangerous. That's all I'll say. Options, you can make a lot of money, but you can also lose a lot of money. That's all there is to it. It's basically the same thing as trading stocks, but you're using contracts, and those contracts can be dangerous. And to be completely honest, that's just too confusing for me. You gotta look at strikes. You gotta look at dates. You gotta. It doesn't. I just have no interest in it. I'd rather just pull up a stock and just buy and sell it. To me, it's just so much easier than having to look at what are they called? Like deltas and what, I don't even know what all that means because I don't care. But all I know is that people obsess over those things because you can trade things like Amazon and Tesla and like all the huge price stocks. You can buy one contract like it at a stock price based on the date that you pick and all that stuff, and just whatever. Go ahead, keep doing it. I don't care. You should do an LLC for trading. I looked into that, and let me tell you this. Ross Cameron, he does not use an LLC for his trading. He has an LLC for his business, Warrior Trading, but he does not have an LLC for his actual trading. Because it's not needed. I have an accountant that I use because I've done my taxes every year since I was 16. Since I was 16 years old. And when I started looking to do it, the first year after trading, I was like, no. I actually did it myself, but I'm pretty sure I screwed it up. But the second year, when I had a bunch of trades and like everything else going on, I was just like, I'm gonna hire an accountant, and so I did. And yeah. But I talked to him, and he basically said there's no point in really doing mark to market. The tax trader status, trader tax status trader. I think it's TTS. I think it's tax trader status. I'm one of those people too when it comes to stuff like subjects like that. I'll get very knowledgeable on it when I need to be, and then I tend to just forget about it because it's really not useful to me until that time again. And then once I start reading about it again, it'll all start to kind of click back. But I think it's tax trader status or trader tax status, whatever it is. It's TTS. He said you can apply for that, but the mark to market thing, it's almost not really needed, because mark to market is really only if you lose money. So if you're planning, like, I think it's more for, it's basically for people that get into the market thinking they're going to lose money, I guess, so that you can use more of it as a write-off. Because if you lose more than 2,000, is it 2 or 3,000? It's $2,000 or $3,000 that you can claim in a year with no mark to market. But if you're mark to market and say you lose 30,000, you can actually claim all 30,000 of that against your income. Where if you are not mark to market, you can only claim 2 or 3,000, whatever it is. I think it's 3,000, but it doesn't really matter. But the point is, if you're losing money, then it sucks. But now, if you did lose 30,000, you can only claim, say, 3,000 of it, but that 27,000 actually carries over, and you can use 3,000 of it each year until you catch up, basically. So you don't get completely screwed. You just can't use it all at once. But if you were mark to market, you could essentially claim all of it. So I don't ever plan to be losing. So it really didn't make sense to me. And there was other reasons too. I'll make a video this time around when it comes to tax season. But for now, I'm not going to really get into it because it doesn't really matter. I'm glad you're accomplishing your goals. Keep visualizing them. Thank you, sir. I appreciate that. I'm doing a great job. Aw, tears. Thank you. Man, we're up to 26 people. I thought it would have been dying down by now. I really don't want to stick around just to try to do a giveaway. Dark side? What was that? I don't remember what I had said to get the dark side comment. Last question. On a range order, will it show a line on the chart of where orders are as well as your entry? It won't show your entry. Your entry will just be on your, like on your position manager or your positions tab that you have open. On the chart, though, it will show you your take profit and your stop order. But in order to do that, you have to right-click, go to chart area, config area, and then over here on the left side, see where it says show orders? That you need to have that enabled for it to show up. And then show trades as well if you want to see the arrows on your charts for your entries. So you could do that. It's not going to give you an indication exactly of the price that you got for your average. If you want that exact number, you could click on the arrow and it'll tell you your average. Like here you can see where it says down the bottom there, 51.73. Or on your position manager, you can see it on there as well. Doing business with the Chinese. What's up, man? When you add to your position for like the third time, do you get the all-in kind of feeling, or is it still part of the plan? Well, that's kind of why I'm trying to get away from it, because I was just telling Thomas this the other day. I have an issue with getting that last ad because I know it's my last ad, if that makes sense. It's hard for me so if I'm doing 112 on the way up here, say I hit the first one here at 51, hit the second one here at 51.50, and then we get to 52, I have such a hard time hitting that, even though to really make that strategy work, you have to hit that 2 on the way up, right? You have to hit it, because if you get the pullback, that too is what's going to bring your average up and make it a winning trade. And I had such an issue with hitting that last button. And that's actually why I tried to split the 112 into 6 entries. So I did like a half, 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 and then 1-1 to equal 112. And I just found that I was never getting to 6 entries. And when I did, I was adding on the backside to get them, which isn't a bad thing, by the way. But I found that I don't know, just playing the front side just isn't clicking for me. So that's why I started to figure out a way to maybe try to play the backside. Because like I had said earlier, since you're just getting here real quick, you can, if you did 1-1-2, like I just said, like 1 at 51, 1 at 51.50, and then 2 up here at 52, that's going to bring your average up to what, 51.75 area? Actually, yeah. And so look at my entry here, 51.73. So you literally get the same average without any stress. So to me, it just makes more sense to try to go this way, and it fits my personality a little bit better, especially because I have a set risk every single trade. Where with this, sometimes if the range is a little bit bigger than you thought it was going to be, sometimes it's smaller than you thought it was going to be. Sometimes you only get a single entry, and your winners are a lot smaller than if it were to go against you and you end up with a loser. It's just, I feel like trying this for now it just fits me a little bit better. So yeah. And if you want to see kind of what I was talking about, just go back to the beginning of the stream. I kind of go through it in a little bit more detail. My tax video would be ugly. It's all about paying the tax, man. So true. And if you live in California, I feel bad for you. You literally take your income and divide it in half. And then it's usually, you actually still end up with less than that. Yep, no problem. By the way, I'm setting up CMEG soon. I'll be using your code. I used the Trader demo today and traded as if I only had 2,000 to trade with 1-4 margin and made over $400. That's pretty awesome. How much were you risking? It's fast. I got into the trade at low 3s on Trader, but could not get into the same stock on Robinhood until it was at 550. What? I mean, granted, Robinhood is not made for day trading, but that's ridiculous. All I can say is if you're making $400 and you only had 2,000 to trade, that's a bit high. Just be careful. I mean, if that's like a 1-4 risk reward, I mean, even so, what is the math? See, it gets this late. I can't do math. 2,000 divided by 100. No, it's 100 divided by 2,000. That's still 5% of your account. So I'm just saying, even if you're only risking $100 to make 400 there, like that's your set risk. It's a 1-4. Just be careful. That's 5% of your account. I was advised the corporation was the best way due to a corp could own assets and take the loss on them, and you're allowed corp meetings 4 times a year, and they are taxed at a lower rate. Yeah, I mean, like I said, I had a lengthy talk with the tax guy, and he's not just like a normal accountant doing trader, like my trader stuff. Like he's a guy that does basically just traders taxes. And I'll have to find the emails. Like I'll just have to make a video about it. But he basically said that it's really just not worth it. And like in Maryland, to have a LLC, you have to pay $300 just to get the LLC, and then you have to pay them a yearly fee to keep it. So there's also that. And it's just one of those things where I'm pretty sure it's not worth it in the long run. I mean, I remember him telling me like what the advantages of having it, and they definitely did not weigh more than just not having it at all. Like it was almost like it just didn't matter. Like there was no clear reason to get it. Yeah, math. I always say I'm really good at math. I am. Like I know how to do math. I can't do it in my head. So you'll always see me just pull out the calculator. And then even then I still did the wrong equation first. All right, we're going to start the countdown. 11:45. Any new questions or no new questions by 11:45? I'm going to get out of here. I'm getting tired, clearly. I'm starting to feel good with this drink. It means I'm going to get some good sleep. Join button down below. Hit the high level support. It supports the channel, but I do give back. You get the cool little emojis and moderator and all that good stuff. But the real reason you're getting it is the 2 Saturdays every month. We're going to do the strategy talk. And that's tomorrow is the second one of this month. So if you want to join in on that, hit that join button. If you're not subscribed, hit that subscribe button. Looks like everyone's pretty much hit the like button, so thank you for that. That's pretty much all I got. Trying to think of anything else on the business aspect side of things. Webull. If you guys want some free stocks, that's down in the description below. I feel like everyone probably has that at this point with pretty much every influencer out there spitting their Webull link out there. I always tell everyone, if you don't have it already, you're silly for not doing it because it's literally free. They just give you free stocks. You get one just for making your account or for signing up. You don't even have to deposit money. And then if you deposit $100, they give you another one. And then you can immediately take that $100 right back out. Or I think it has to sit in there for like 30 days, but you don't ever have to use it. And then you can just withdraw it and you got 2 free stocks. So I always tell everyone to do that because it's literally free. There's literally no catch. It's free. They're giving it to you in hopes that you'll trade and use their platform because then they get the fees and commissions and stuff like that. All right, Okuo, thank you for stopping by, man. I'm also thinking about throwing, for the high level support guys, I'm thinking about throwing an extra live stream in there during the month. Like I'm doing a live stream for everyone on Tuesday, but I'm thinking for next month I might throw an extra live stream in there at some point while I'm trading during the month as well. So it would be a little extra perk. And if you just want to support the channel and you don't want to necessarily pay that much, there are 2 smaller options in there as well. You don't have to join the high-level support. And like I said, pretty much all money that is received from YouTube, you guys see that I try to give it all back. I really do. I'm pretty sure I did the math. I think I did it at the beginning of this month, and I think like after... What's this week? Let me click the calendar. I think it was August. It was like this. Yeah, I think it was the week of August 21st that I would actually catch up with the gift card giveaways with how much I've made on YouTube. So it's like I'm trying to give it back to you guys. It does support the channel. And I told myself anything that I get from the memberships that I would put into my account to save up for the Interactive Brokers account that I'm saving up for, that I've been saving up for on the side anyway, and I'm getting pretty close. Like anything that I get from my affiliations, I put straight into that account. So when I can finally get to that point, I can open up an account over there. And yeah, so just want to let you know that I'm not literally just taking that money and spending it on crazy things. I'm putting it back into this. I'm putting it back into you guys. I'm putting it back into my trading. I'm putting it back into the channel. It's all being put to good use. It's not being, spent on luxury items. I'm not going to buy Ferraris and Lamborghinis. Yeah, state by state, it all depends. Yeah, like I said, I don't know anything about that stuff. I just know that he said, here's this, here's that, and I read through it, a couple times. I even read it with the wife to see if she picked up on something I didn't, and it didn't make sense to do it any other way. I will tell you that I had a free copy of TurboTax, and I tried doing them myself while he was preparing them, and I ended up getting back like $2,800 more from whatever he did versus what I would have got on TurboTax. So it cost $700 for him. So just by using him, I ended up with $2,100 more in my account versus if I would use TurboTax and not really knowing what I was doing, what I would have got back. So it was a pretty big difference. And from that moment on, I said, yeah, we're just gonna do that. Because he knows how the system works. He knows what you can do, what you can't do, what you can get away with, what you can't get away with. So, and on top of that, I don't ever have to worry about getting audited. Because if I do, that guy right there, he filed it. I didn't do it. I gave him all my information. I know that I gave him the correct information. He filed the taxes. he did it. All right, guys. I gave you an extra minute and a half there. I didn't even realize it. I'm going to get out of here. I appreciate y'all stopping by. Have a great weekend. If you're one of the high-level support members, I'll see you tomorrow night, 9 o'clock Eastern. Be there, be square, all that good stuff. It's an hour long. I decided that's what we're going to shoot for. Hour, hit the books hard, go through. Let's get it done. And that's that. Have a great weekend if I don't see you tomorrow. And yeah, love you guys. Peace.